What's up, gang? Good morning. I'm having a bowl of cereal real quick, and we're gonna get to it. I'm probably just gonna watch the Spy, AMD, Oracle, Illumina. I might take it easy this morning and see what falls in my lap this morning. Hold on, baby. That's the old girl coming in yelling at me. All right, 5 minutes. Excuse me, 5 minutes. What's up, team? Alright, is this not working? I don't know what the hell's going on here. Maybe it is, maybe it isn't. I don't know. Oh, man. Low volume day, guys. Low volume day. Now I gotta feed the cat because she's back whining. All right, listen. So far, low volume day this morning. I think Illumina. Oh, before I go over that, BIBB or BIIB. You're gonna want to watch this today. Excuse me, sorry. So it's holding that. It kind of held that level. You had to print off of it this morning. Just look for the NASDAQ, maybe the SPY to trade. There's such low volume, which I figured coming into this. It's too big of a week to just for anybody to place any type of bets. So I'm just gonna see what happens. All right, I kind of already knew this, so it's a good thing I decided to sleep in a little. You know, if I could have got up, I actually would have. I was so done for. I was so done for with this, you know, with this funeral and stuff and everything. And like not sleeping as much as I probably should. Catch it up to me, you know, throughout the end of the week. All right, gang. There's the bell. It's 9:30. Let's go. Good luck today. Yeah, you can. I mean, you just have to. Yeah, you can. No, it's what I do. I would, unless there's a setup there. You know, unless there's a setup there. That's where people make the mistakes. I've taken trades right off the bell because I knew like the SPY was going to come down. Like right now, I think it might go up. But look at it. This thing is just not. Look at the opening print. This is a 2-minute, but still, like there it goes. Now it's getting a little bit. It's gonna be a really low volume type of day, unless there's some headline news or something. There's some news out in Russia or something just with this war. But yeah, I do apologize for coming on a little bit late, but I don't know. It's just, you know, sometimes things just happen. And no, I'm not paying for this. I mean, I should pay for it, but I don't think I would use it as much as I would if I paid for it. So this will come up in like 10-15 minutes or so. But Russia, wherever the hell Russia's at. Oh, they don't have Russia on here. Awesome. They said, nah, we don't even want your ass. That's hilarious. That's so funny. There is no Russia on here. They got booted from Finviz. That's so funny. I just realized that. Oh, shit. I guess Finviz is... You guys know TradingView is a Russian-made charting software, or like, you know, on their site. I mean, not that, you know, it can come with any race, you know, any race can make up something. I just didn't know if, you know, there's probably somebody out there that didn't know this, that it was Russians that made TradingView. Oh, man. Alright, so... Oh, man, I did have somewhat of a list. Look at these candles. What? Okay. I got a little nervous at first. I thought the NASDAQ was having issues again. But yeah, so like sometimes like if I see a setup or like I see something like I don't know, it's so weird. Like I don't do it often, but I just did it a few weeks ago. Like, I slammed some puts right off the bell. I didn't like buy a whole bunch and over leverage myself or do something stupid. There goes AMD to the upside. AMD to the upside. I ended up just grabbing puts off the open because I was like, it's going down. I'm trying to tell y'all it's going down. And I was right. But yeah, you don't know where that first candle, like, excuse me, sorry. Like, especially for Tesla. Tesla is another one of those stocks that'll just, you know, it'll just put in a random fake out candle. I don't know what I'm doing. I have no idea what I'm doing. I'm trying to get this appearance. Like, I need to save this. Reset. No, I don't want to reset it, but I would like to save it. I would like to save it, you know. If anybody's out there and can tell me how to save my second screen, and like keep it as like a default, that would be greatly appreciated. I mean, this one's doing it over here, but so there's two different. So if you notice what's going on here is because there's two different, like, you see this green line, that's the 20-day moving average. You notice how it's not in over here? It's two different setups going on here. So where's AMD coming in at? Where are we at with AMD? What's the room? Okay, so it does have room up here. I want to be maybe we're a buyer of AMD. Oh my god, I gotta go feed her. Fudge. We don't have to do anything, obviously, but it's a zone. It's really a zone. There's not much. I'm gonna need AMD down here if I want to be long that, or I'm gonna need it up around this area to be short it. And the market is coming down. What are the Qs doing? I gotta get MACD, all that good stuff up. I gotta go feed my cat. I don't like being behind. Is that another rejection? So futures, if I was doing it correctly, futures gapped up like a whole bunch. There it goes. Look at that increase in volume with the tail. That is pre-market lows. So watch pre-market lows for the SPY. I got you, man. I appreciate that. Or yesterday's close. One of the two. I need to get my, whatchamacallit. It's going to be one of these days. It's going to be one of these days. Like I said, that like, I probably needed to look more at the candles, but I felt like the SPY was like putting in bearish divergence. Like it wants to, like it's telling you that it wants to come down. And I don't want to, it's not that I don't want to believe it, but that was just a sense that I was getting from some of the stuff I went over last night with the, when I was going over the SPY. Dude. Trading view is something else, man. Like, look at these candles. Like, you can't just have a regular ass volume chart. I want to see if this becomes support. Looks like it's starting to. It looks like we're making it bounce up. Alright, gang, let me go get her some food, and I am going to be right back. Level 2. It's important. I don't know if you guys use it or not, but I don't necessarily use this one. I have another one over here that I use that's under the camera and where my orders and stuff go through. And then MACD. Alright, gang, give me like 2 minutes. Let me go feed her, and I wanna look for the bounce back. You broke pre-market. You're still kinda holding it, but this is why we need like 2 minute, 3 minute charts. That's what I need to start using. Yeah, you never close below it. So maybe there's your test of the upside here. We'll see after 9:45. It's still early, so let me go feed her real quick. See if we can't, even if we can't get a base hit, something. But you said Baba, yeah, man, appreciate that. That's awesome. Watch if you want to watch, like if you want to play the overall indexes. I don't know if I would suggest it. Of course, I'm not suggesting anything, but just watch. The volume is low. The volume is low. This looks like Baba might be on its way down, bro. I don't know. Shit, I shouldn't have did that. That's crazy. I'll have to bring it back up on the 15-minute. The volume is the volume is actually kind of there. Not really, actually. Not really. Like, look at this candle. This is it's on 2 minutes. It's 366,000, 500,000. What is this? 202. This was 366, I think. 363. And what do you have? So, volume's kind of low. It looks like it might chop around. Wouldn't be surprised if the market did that too. I wouldn't be surprised. Crack this bar. Alright, let me go feed her, and I need to. So that's my pre-market. Just trying to see what I can go off of, just so I can have in my head my pre-market lows. So the pre-market high is at 430 level. So futures last night, it looked like on my end that they like gapped up a little bit. And then I look, and then they were only up. Like, it was weird. It was so weird. So weird. I've never seen that before. Like, I'll show you guys what I'm talking about. Unless my chart is screwed up and I'm putting in the wrong ticker or something. So, for instance, like, look at this. Look at S&P mini futures, okay? Watch this. Like, look at this gap up. Look at this gap up from Sunday. This was Friday. All right, that's Friday. I'm like, what the heck is going on here? Like, look at this gap up. That's so insane. 430 to 435. Like, that's big. And it says it's only up 0.2%. Like, what? I know you're dealing in big numbers and all, but... So, guys, if you guys want to watch the SPY and kind of like play play the SPY. All right, this is a 15-minute, but we can go to like a 5-minute or something. Watch for that to either break or not break. What I'm saying is watch for this to hold. All right, watch for that to hold. If this holds, this pullback right here, then you're gonna look for the opening print. All right, it's as simple as that. Then you look for the opening print. See how you stuck that level right here? This area, 430, 51, 4,351, 431. Look at that tail off of there. All right, so if you do break this, then you watch your opening print, and then it is gap fill time. Or the low, or the high from yesterday. That's obviously would be first. So just put it in sections and kind of just trade from there. You know, you haven't broke this or anything yet. If it continues to just put in lower highs, as in like it's just like doing that and then doop, you know, then maybe you might want to play it. But just watch for indecision. It could just trade sideways all day. It's hard to say what we'll get. We could use IWM, sideways, no big deal. I gotta go feed my cat. Dude, MACD is not in there. Why do I do that? It's because I haven't, look, I'm just, oh man, I do need to get sleep. There's the MACD. Thank you guys. Thank all of y'all who joined us today. Thank you guys for liking and subscribing and stuff. It's greatly appreciated. I'm going to run through these charts real quick. If you guys have any questions, just let me know. I might be a bit quiet, but I'm here. And just let me know what I can help you guys with. If you guys have any questions and stuff. If you could, share this to a friend, family, randomly. Maybe it'll help somebody, you know. The more people we get here, the better chances it is that we're going to make, you know, more money or even more money, because maybe we don't get the news. Maybe we didn't hear a news source or something come out and, you know, that person did and shouts it out in chat, stuff like that. I will be watching Carvana just randomly because that trade's probably over with, but oh man, look at that, guys. We drew the line. We drew it and said right here we were shorting right there. I literally took the line and went like that and said, this is where I want to see it get to short. This is such an unbelievable setup. If I were any of you guys, I would take a picture of this shit, hang it up on your fucking wall. Excuse my French. You know, not necessarily hang it up on your wall, but remember this pattern. You can even do, like, I don't even know what I'm doing. I don't know what's wrong with my brain this morning. Like, I don't know, how do I take pre-market off? I know how. Like, I know how, but I just was like, I'm just not with it today. I'm just not with it. I don't know. So you had such a rally with a small gap up, with a gap up that couldn't hold. So this is a 2-day event too, with a shit stock. This is a playbook. This is a stock that should be in your playbook. This right here. That should be in your playbook. A stock that failed to make it on easy policy and then decides they're going to raise guidance in tougher economic conditions. Like, it's a fucking joke. Like, are you kidding me? Yeah, we're going to raise guidance. We're going to do really good. The fucking unemployment's getting ready to go up. The Fed's tightening liquidity. The Fed's raising interest rates. How many people you really think are going to be getting loans? Those kids got to pay back their college tuitions. I'll add all this up. Yeah, I think we're going to do really good. And that's what makes this company look so fucking stupid. Is the fact that they come out and say they're going to raise guidance. What? Now, they very well, might do a little bit better than expected, but it's a dangerous game. It's kind of funny, if you ask me. It's kind of funny because there's just every headwind possible in front of Carvana right now. Why is the volume continuing to do that? I don't like that. Yeah, I'm going to watch AMD. I just don't know how much AMD has, man. I really don't. Unless you guys think it's breaking out to new highs, which it possibly could. You know what I mean? I need something with some meat on the bone, like Carvana, And look, like I said, hit that resistance and look at that sell-off. Look at that. It's an easy short. I just drew that line. Look at that, to a T. God, I'm going to get so mad and frustrated with this thing. Not to say that it is going to stop, but listen, I said I want to be a buyer down here. Either here or here. I'm not buying it here. There's no room, especially in resistance. So, if you have resistance directly above you, I hope this was on. Yeah, it was. Okay. Like, you need to let this thing pull back and then get long. Okay? Like, it's got to pull back because this is all they're going to do to you. You're going to find this out all the time and you're going to, like, get frustrated. You're going to say, I can't do this. The market's a scam. No, like, if you're long, you got to, like, let it pull back into an area and not, like, you could scalp this thing, but this thing went up, I don't know, even if you scalped it, like, even at this bounce on the 9 EMA, 127.99. So 128, 129, 130. That's $2. That's $2 of upside versus $3 of downside. Like, your risk to reward is backwards. It's 3 to 2 instead of being 2 to 3. But my point is like, there's no meat on the bone here. You're not going to find traders going long here unless this thing breaks, pulls back, bang, holds, then you buy that. Then you buy that breakout. You can try and bring it through the high, but again, I just said, 5 minutes ago, 10 minutes ago, I said, if AMD pulls back here, this is what it's going to take for me to be a buyer. And I'm not the only one that feels that way. And then, even if it pulls back here, I'm going to watch it. I'm going to watch the volume. I'm going to watch the price action. I'm going to see how it reacts down there. And I'll like, kind of gauge it, So, yeah. And why is that? So even more so right here. Look at this double top, actually. Like, that's a really nice double top. You want to see the perfect setup for AMD? You could get like a 2-day sell-off, short this thing, and get here. Get right here. This 121 on AMD would be such a beautiful long. They might not give it to you, but you have somewhat of a double bottom here. But again, it's at least here. This is the risk to reward. So this thing could, like, you could get like a look. Let's see. The volume isn't bad. The volume isn't bad today at all. The volume isn't bad at all. So you had an increase in volume and still couldn't break that level. Alright? You still couldn't break that level. I'm going to watch AMD. I'm going to be watching AMD. I was saying, keep an eye on the Qs and see what AMD or see what the Qs are doing in whatchamacallit to AMD. Let me see. Like, look at AMD. It's literally up, down, up, down, up, down. It has not done anything. Not to say AMD can't do anything, but look at that. Isn't that crazy? This shit right here tells you how big tomorrow and Wednesday and Thursday and Friday are. You know what I mean? I might take the short on AMD. We pull back to this 9 EMA. I'm not looking for much. Okay, I'm not looking for much. Like, I don't even know if I... The reason I shouldn't be taking this trade is because there's no volume. There's no catalyst. Like, there's news with Neo. Like, look at Neo. Look at the strength in Neo. Okay, boom. You get another pullback in Neo. I would look at Neo, Oracle, Illumina. Like, AMD is a cool stock and all, but you got to go where the news is. There's news. Look at this volume. Look at the volume in comparison to... Whoa, there's no volume. That's weird. That is weird. Okay, so there is volume. So this is an average day here. Really low. I thought 5 million was... 3 to 5 million was kind of a lot when I seen that volume bar. But I didn't know the day before it traded, 6-7 million shares. So, again, that's why it's important to go where the news is. That way you have movement. You have a catalyst, which is a reason for the stock to move. Oracle, Illumina, Biogen. God, I love the markets. I love the markets. I don't know if this is me or if it's the actual stock. Because there's a gap, like literally right in the middle. I don't know. ORCL. I love Oracle. I wanted to be a buyer of Oracle way down. This is a good stock. Like, I know my state, like the DOT and stuff like that, like they use Oracle. Like Oracle is like it's a cloud space, like where you can just do different business on it, like spreadsheets, like all kinds of shit. A lot of companies use Oracle. Oracle's huge. It's been around for a long time. This thing was at $60. It's almost at $120. That's 100% gain. That's not even year end, guys. You could have made 100%. That is 2021, 2022. So year end we were $82. So yeah, never mind. So I was gonna say that is a lot. 100%. Look at that gap up. I want to see what... I'm going to go over my list that I was looking at. I haven't really ever traded Ford. But I'm going... Look at that tail again. Look at that. I'm telling you guys, man. You guys, you're going to look back. If I'm right, you're going to look back 3-4 weeks from now, month, 2 months from now, and you're going to see this thing way the hell up there, and you're gonna be like, damn. You might not, but chances are. Oh, nice, bro. I wouldn't even. Well, that's what's up. Good job, bro. I would watch, man, because your commission might be more than what you'll make. It doesn't. I mean, it's just stuck. It feels like it's stuck. I want to go feed her real quick. I will be right back, though. Great job, Collins. Great job, dude. Well, if she's not going to get up and go get it, then I'm not. Let's see. So this is why Neo's going. Like, there's a few. There's news with Neo, and then there's Xpeng. So you guys want to go where the volume is, or XPEV, whatever. Like, look, bada bing, bada boom. Okay, this is how this trading shit is done. Look at the volume. This is where you want to be. You go where you want. Doesn't mean you should probably be there. You know, the SPY ain't doing shit other than making the still held bottom end. So I would take a look at XPEV. Let's go to the daily. Look at that gap up right to the 200. It's rejecting the 200 day. Let's see here. I don't want to fool with these China ADRs today. I don't feel like being a communist this morning, but if I have to, I will. Okay. So the one thing I see is a very nice pennant. It's kind of bleh. Like, I don't know if that was a failed breakout. See, this is the thing with China ADRs is like they kind of do what they want. It's so weird. Like, you see it gapping up all over the place, like island reversal. You know, gap down, gap up, trade sideways, little candle, gap up again. Like, they're just so all over the place. It's ridiculous. So that's what we have on the daily. On the daily, you have a rejection of the 200 day. Now we're gonna go in and I don't know why my brain is so slow today. Remove. Like, I really don't get it. It's making me a little nervous. So you have an area right here. Come on, yes, come on, let's go eat. This is your support zone right here. Come on, we're gonna go eat turkey. Just watch XPEV. I'll be back to go over it. It may already be done because it's already gapped up. Come on, no. BRB. Alright. I apologize again. We have had a lot. We've gone through a lot this past 2 weeks, and then on top of it, I lost another family member 2 nights ago. So that'll be another funeral, and I don't know if I'll be live, but I can come on and give a live stream or like trade in the morning or something. So I'll be in Florida probably in another week or two. I'm not sure. It's just crazy. It's how it happens, you know. It's just comes in threes. At least it has for me. The last time it was my my girlfriend's grandmother passed away on a Friday, and then the following Friday my grandfather passed away, and then it was her uncle passed away, and it came in threes that time too. So we want to look for so guys, AMD kind of is in a consolidation phase right now. All right, it's not doing too much of a direction. There's not necessarily direction in AMD. Nvidia is setting up a nice pattern. Just don't get over your skis, because like we honestly haven't done anything, and we may not do anything. Like this is like, and remember, this is the most volatile part of the day, and you're not getting much volatility. We've went from 431 to not even 430, guys. You've literally went like 60 cents, 70 cents, 429, 430.29 to 431. So just LWM. Oh, IWM. Oh, nice. All right, there you go. There's movement there. So that's one. Good stuff, bro. You're on it. Good stuff. Good stuff. Good stuff. Good stuff. It's got meat on the bone too. It's got meat on the bone. You're in an area of resistance there. Where are we? Boom. Another day. Okay. That you gotta look for. You did break this level. You did break this. You did break that level right there. Let's look at it on the 2 minute or the 1 minute. Right there. You see that break and retest of it? You see that? That's a nice chart pattern. Now it's got to hold. It did hold. It pulled back. You see what I'm talking about? I just drew that line for you there. That's resistance. And what the issue is, though, what the issue is this. This is an issue, or going to be an issue. Look at that increase in volume. And the sell volume on the way up looks like it's dwindling. So you had nice volume here, down here. And then you go higher, but the volume, it does increase, but it doesn't increase as in go higher than the candle that set its, put its foot in the ground and lifted it up. If I'm explaining it right. You had a decrease in volume. You kind of just, it's so weird. Maybe they are positioning, because like I said last week, that like the IWM is like a stock, like in that sector is like what you want to look at for longs, because it's got the most meat on the bone. How much upside could you expect on Nvidia, AMD in the next 30 days? 2 weeks, a week? This could, this is giving you some really good opportunity. I'm really curious how this ends. It doesn't seem like sellers are stepping in. I gotta look at small caps. See, I came into the day so unprepared, excuse me, but I kind of expected that. My fucking mic is off. I was talking the whole time. I don't even have my squawk box on. I don't have anything going. I want to see what, just instead of having a look over here, I want to see what, if there's any small caps. So it looks like the SPY's kind of putting in a double bottom. It looks like it's trying to break the lows, but you could get a small push off of here and kind of test at 431.80 possibly. I wouldn't take that trade, but I'm just, you know, again, this is all just, I wouldn't mind being a market maker. I mean, I don't know how difficult it would be, like, in today's world. But like I said, man, I felt the SPY was going to start going. Like, it could start testing. It's at the bottom of the range now, and see if it starts, see if it can break through. It's going to pull back. You want to be a buyer there to see if it can go. See if it can give you some upside to test this 431. I'm not sure though. I'd be on the watch out. Look at that sell volume on the SPY. All right, so what did we say, guys? We said the ultimate play to the upside. The ultimate play to the upside on AMD would be a test back down here. Because we gapped up above this resistance area. Support, look, resistance, broke it, support, support, broke it, resistance, 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 you know, and then gapped up and said sayonara. So, kind of got to wait and see what you do here at this high a day. All right. I do have one. Sandy Echo Victor. SEV. I think that might be a small cap. SEV. I'll go back to AMD ones. Oh yeah. There you go, guys. That's a nice chart pattern right there, boy. That's a nice one. Look at that. Gap up. You never broke below the initial. This is the extension. Here comes the extension. Brutal. And then here should come the pullback. God damn it. We missed that one. It's all good. 36. 36 cents. This thing is way too cheap. But that's a 60% gain on the stock alone, guys. Think about that. Man, they're just eating this thing up. It's going to be hard for me to play this, because I just don't know if I can bring myself to... Just don't know if I can bring myself to trade it. Oh, they have David Solomon from Goldman Sachs on CNBC. I might have to turn that on for us. I'll play it real quick. Shouldn't be copyright because I own the whatchamacallits. Guys, look at this. 75% now. From when we looked at it, it's already went up almost 20%. Dude, the SPY isn't doing shit. It's not doing anything. Man, I think we might start getting some small caps breaking out. I need a pullback on this thing, though. It needs a pullback for me to participate. This is an overextension, Collins, from like the question last night. Like, this is kind of what an overextended stock looks like. Just a massive blow off top. It's parabolic. Probe in the PGA Tour. Is the PGA Tour traded? I know that one company is traded. Don't let me forget SEV. Dude, this thing's going nuts, gang. This SEV is just... I think it's topping out here, though. I think it's trying to put in a pullback. It's struggling up here because nobody wants to buy it up here. They've already made damn near half their, 50% of their, got a 50% return in a matter of a couple minutes. There's the increase in selling. Oh no, if this thing puts in a bull flag, which it's not setting up for it right now, but it kind of is. Yeah, I'll come back to that. Looks like small caps are breaking down, so.
Shares of Kellogg at the lows now 65.64. Near post reported late Sunday. Is Kellogg's next. Dylan Mulvaney goes into line with Tony the Tiger at the Tony Award. That's letter K.
Look at Kellogg, guys. Look at that short. So there's something with Tony the Tiger. Okay. I don't know if they're getting rid of him or what. What's going on? I have no idea. Look at that, guys. Did he say Asana?
Goldman Sachs CEO Solomon says expects more real estate lending impairment.
Oh, I know, isn't it? Yeah, there's something going on with it. I'm not sure. I have to pull it up, but I'm not sure. I don't know if they're retiring him or what. They're putting him down, laying him to sleep. I'm not sure, but it's definitely was the short play today. God, I hate being so fucking tired. It was such an exhausting weekend, especially yesterday. And then I come on here and watch a bunch of squares and more squares and lines. Squares and lines, so it really messes with me. I'm not sure, man. This is your option contracts. So you're right. You took notice, and you are right. They're not up that much. They're still cheap because the VIX is at 14. But this is your option pricing right here. BIX. All right. Yeah, they probably are because they're pricing in a movement for this week. It's not CPI, but it's more like CPI, PAL, PPI, like all of it. All right. So if there's like you have a big data this week and you expect movement, then yeah, you're going to charge more because you're selling the option. If you're the person selling the option, you're going to be like, bro, I ain't selling you that for that much. You know? It's like asking to buy, like, whatever. We can come up with all kinds of stuff. I was trying to think, you get like let's just say a pound of something. And he's like, yo, I'll give you 500. You're like, bro, are you crazy? Get the hell out of here before I smack you. You understand what's going on? You could just,
Solomon says he is a big
when it should go for like 2,000 or something. Just, I'm just making up random shit. So, yeah, you're exactly right. It's not necessarily CPI. It's just more Powell and is this the last interest rate hike? It's all of it. It's CPI, it's Powell, it's, you have not only, so you not only have us, you have not only us making a rate hike decision, you have Europe, ECB, Christine Lagarde is her name, and she's actually been the, pretty much the Treasury Secretary, whatever, for Europe, she was in the '08 financial crisis. She was there. She's been the girl since at least then and before. Like, I don't know when she, got picked or whatever, but she has been serving there in office since, like I said, she was in there in the great financial crisis. So, and she's still there now. So yeah, that's implied volatility. And here's the thing. This is why, you see how the VIX is up, which, like, your contracts are up, but the SPY's not moving? Today's the day to be a seller because you're getting more, like, you're selling them, which, like, and you're not getting a lot because the VIX is at 14. So contracts they are up, but they're not up that much. Like, have you seen, like, do you remember, like, like, I don't know, like last year, or like, not even really last year, I guess last year, like this past summer, wait do you see when the VIX gets up to 30, 22, 28, all right, when it starts getting up there, you're going to be talking about, when it's up to the 30s, you're pretty much going to be spending $300 for a daily on puts. They're really expensive. So this is why it is good to this is why I bought my put contract, bro. Because whether the market didn't move, all it would have taken was news, and then the VIX to go up, and the premiums would have shot up, like the implied volatility, and which is the expected move, which is this, like the uncertainty. So maybe I didn't explain it right, but that's why I bought puts last week. Because of this, and then maybe I was a week early because the VIX is down here. All right, the VIX is down here. You gotta have something, You sell or you buy when it's down here, and let's say you should be a seller. You should be a seller down here, and a buyer when the VIX is like up here. Like, of the underlying stock or anything, like I'm not telling anyone what to do. I'm just saying, like, this is all, like, this is how the game is played. Volatility is real low right now. Volatility's gotten crushed, and that's what this is. See, this is down movement. You had a spike, but then you had an extension. Like, you haven't been at these levels in forever, You haven't been down here since 2021. So, see what I mean? Even if you were to get to 15 or so, like, this is why I bought puts, bro. That's all. That's why I bought puts, because the risk to reward, and all it would have taken was a little news, and this thing would have shot up. And whether or not it was in the money or not in the money, those premiums would have just went, they would have went higher just on the fact of pricing in a future movement. So I guess, like, this is pricing in a 1% move in 30 days. Okay. You each like 15, 16, 23, 25, 28. You have standard deviations. You need to learn about standard deviations. Like, when you get like a big move, usually if, like, in a stock you'll get like a big move and it'll just like have a parabolic move to the top end, and usually it'll get to that fourth standard deviation, and then that's when it sells off, or it'll just get over it and then just start falling back down, because traders know after the fourth standard deviation, like, that's it. You're definitely not buying at that point. So I like the 2, 3, and 4 standard deviation, and I have the standard deviation for the VIX. I also think that that's important. So, which is, I can give it out another day. We'll get a we'll do a lesson on the VIX, because you can use the VIX to kind of like, there's a lot of things you can do with it. There's a lot. And this is what I was saying yesterday with triple leverage. I used to trade TVIX. So you see how this thing popped up 6%? Well, it was triple leverage. So you would do 6 times 3. And that's what the VIX would give you. TVIX. Doesn't exist anymore, unfortunately. They got rid of it. They buried it. It's in the grave. It's so sad. I don't know why they did that. I don't know why they did it. It's not even probably going to come up. CCL, yeah, Carnival Cruise had news this morning, right? I'm tired, bro. Like I said, I had my cousin's funeral before I did that short, and it's a good thing I did that short before the funeral, because I thought I was kind of over it, but apparently I wasn't. CCL, I think, also has some bonds that they're going to try and come out with. Usually it's up around this price point. I wouldn't short it right now, but I would be looking to short it up here at 17. Or if it starts showing a sign of it. So there's my volume. But yeah, it's above the 200. It's extended. I don't know if they have. Yeah, it is coming into a level right there. That is a good one, T. That is a good one, T. I'm just not going to front run it. That's all. That's all I was kind of like getting at. I just don't want to front run the move, but you know, your risk to reward is kind of there. There goes the SPY too. Well, see, it's just tailing. The SPY's not doing anything. Like, the market's not doing anything. There is a couple stocks moving. That's why I was wanting to be more focused, like he said, on CCL and stuff, like Carnival Cruise and whatchamacallit. I think I had it up here too. No, I didn't put Carnival in. No, I think I put it in the title, I thought. I'll have to go back over it. Like I said, man, it was so hard to wake up this morning. T, are you already short CCL? I might look into this. I kind of don't want to force anything right now, though. Not necessarily force it, but... Oh, nice. Nice, dude. Look at that. Good shit, bro. So what I'm going to do is... That's what's up. That is a good area. Your risk to reward, it don't get no better than that. That's what it is, bro. That's what it is, man. Because your risk to reward, it's like... You kind of got a double top in there, but this tail, that tail, where you couldn't extend the break anymore. Now you're getting the follow through to the downside. You do have some volume here. You know, I kind of just didn't want to front run it. So if we do get a pull, I'm going to wait for a pullback to the 90 MA, and I'll probably jump in there with you. Yeah, look at that sell volume, man. Great job, T. Great job, bro. That's a nice call. That is a nice call. I had to look at the daily for a minute and see. Yeah, as soon as we get a bounce back, hell, even right here at 14.86, roughly. Nice job, bro. Nice job, man. Clap it up. Clap it up for T. Getting it in. Good job, bro. So I'm gonna watch it here, but this is gonna be my entry right here. So I'm looking to get it, like you say, an entry right around here. We get this, T. You gotta give me your info, man, so I can send you a steak. You know, not don't put it in chat, but I can like message you or something, man, if we get this short. Yeah, I just put on a small piece right there on that extension up. So we'll see what happens. My stop will be maybe a break through the high. So 1480. I have to do the math. Just in case it does start to act as a rejection, you do have an increase in volume. So we'll see what happens. But I did put a small piece there on CCL. I just don't want it to trade sideways in here, but you know, so like if it starts trading sideways here, you know, I won't care. But you're gonna see like the 90 MA and stuff. It's not gonna act as like support or resistance until the move. You never even touched it here. Let me bring up the 1 minute.
That's BECN. Correction on that. BECN acquires silver state building materials.
I still feel like it's gonna break up a tad. I feel like it's gonna test up here, try and shake some people out if it's gonna come down. You know, doesn't mean it has to. Or I do want to see the stuff hold. Like I say, it could just sit in this range here. So I'm gonna give it a little bit. We'll see what happens with that. I'm gonna go through some of these. I just want to go through the daily chart and stuff real quick. I mean, 1550 is really the sweet spot for this thing. So it might have a little bit more room to the upside. This is really where it's 16 to 1550. But I'll give it a minute. I just don't know how well it's, I don't know. I'm only going to give it a little. I only went in and bought a few contracts. They're cheap. I just put it on. We'll see how it works out. I think, let's see. Could get your little extension down here. Let's see if it does. See if it does. I'm going to probably take a piece off. I just want to get like before I got into this trade, this is kind of what I didn't want to see, but it's fine because if you look at like a 3-minute or something, I'm sure it's probably just getting the trade line. See, yeah, just getting the trade line, so it's going to make it smooth whether it's to the upside or downside. We'll give it a little time. This is the range I expected to trade and then figure out what it's going to do from there. That's some nice sell volume there, though. Like I said.
CYX and Nexus hitting the high $3.01.
If it's going to, it's going to. It's going to do it now. Like, it should be getting ready to. Boom. There's the sell orders popping in on the 90 MA. They're trying to hold this thing up, but I just don't know if they have it. Volume's telling us that this is the sell point. There we go. Let's take a piece off. I'm taking a piece off. Right there. Bang. Just took a piece off right at that level. I've got half of it left on. I'm gonna see if we get down to this 23.6 VWAP. They're holding this level, but I don't think they do. I don't think they hold it for much longer. If this volume stays, there you go. There's the pop in the volume. I just want to make sure that there isn't like a long lag. I don't think there is. Shouldn't be too bad. There's the break. We're trying to hold her up. That's why I took a piece off on that level, but they're gonna start playing with it now. You're gonna see this thing start to get a little volatile. Maybe it comes back up and tests the 90 MA. That's why I had to take a piece off there. It I don't know. I can't explain it. Can't explain it. I had a feeling it was going to struggle, but it's just going to need a little more time, but it's in a downtrend. Got to give it a little time. Stocks just don't go straight up or straight down, but you know, sometimes we get them. Sometimes we get them too. Great job on that, T. Great job, Collins, on IWM and stuff. Like I said, I didn't even know if I was going to trade today. There's the break on the IWM. I'm going to see if I can get CNBC or something on for us. Let me get my headphones. Let me make sure my phone's plugged in. So we got a little piece of profit off there on Carnival. We'll see what the rest of the trade brings. Hasn't paid for itself, but I still think VWAP's in the works. I'm kind of curious if it like pops up only to get rejected to come back down for the final leg, to like shake people out of their shorts or their puts, only to shake them out and go lower. But it's a nice setup. It's holding the 90 MA. It broke it, got to it, now it's holding it. You know, that consolidation was healthy. It dragged the 90 MA down. And you can see, as soon as it dragged it down and they met, you know, maybe that should have been my entry. Boom. And then got out. Like, this is how you can always improve, you know. You can, you know, you're not going to be, you know, there's only, you can only get to a certain point, kind of. But maybe I should have waited and grabbed it here, kind of like looked at it, timed it up, and it just caught that move, took half of it off as a scalp. But I think this thing, so what happens is you could get like overnight, they could do a bond off and come on, you can do it. Break this. Break it. You can do it. I have faith. It holds this base again. I would watch for the upside. Okay. It's trying to hold there. And I would watch for a reversal and test this area up here. Look at him fight. You broke it. There she goes. There she goes. Great job, bro. Great job, T. I want to watch this area here. I took off one piece. I got 2 contracts on the table, that's it. It's a small position. Alright, I got 2 left on. We're in the green now on that. Great job, bro. I couldn't size up on this thing. I could have, I guess, but I just couldn't size up because it looked like the resistance was up there at $15.50, $16 roughly. And I kind of wanted to show me it's going to, set itself up for the downside or something before I just go balls to the wall. But that was a beautiful trade. I'm going to keep the rest on because it's paid for itself and I'm in the green just a little bit. See if it turns.
U.S. senators to receive a briefing on AI today.
What were buyers are now sellers. Remember how they held it? Remember how they held it up right here, here they held it. Now it broke. Let's see if they step away. See them stepping away. How there's the sellers are still in control. Drag the 9 EMA down. Have another leg. Look, watch. It should have another leg down. All right. And then it should bounce back and drag this 9 EMA down here if we're going to get some real downside. Maybe that's the last bounce before the downside. Let's see here. You are kind of coming into minor support here in front of VWAP, but just CCL doesn't move like that. That was one we called out too this morning, was the AMD short up here. Short and AMD up here. This being our targets. Oh, nice, dude. Yeah, look at that, bro. That's a perfect setup right there. It's not a perfect setup, but it's a nice setup. You pulled back, held the initial open. You opened here at 185. You pulled back, tested it. Baby, what's wrong? You okay? Yeah, that's nice job, bro. Nice job. I was just about to say, I think this spy can get a little legs and kind of maybe test the upside of the range. But then again, with those type of tails, I don't know. It's no, baby, please hold on. She's so beautiful, isn't she? And she's the best cat in the world. She really is. I almost got her talking English. She's down for the count. I was looking. I got so screwed on the fill down here on CCI. I didn't get screwed on it, but I was like, oh, come on, you could have did better than that. You could have did better than that. I should have had an order sitting there. I haven't really played CCL in a while. So you might get, now that this is broken, you might just get some consolidation through lunch. It might get a little boring. Yeah, that kind of feels like either it's going to have some more upside or it's just going to sit here and consolidate. Nice job today, you guys, though. Great job. You know, it's only trading's hard if you make it hard. I'm gonna go grab a coffee and then I'm gonna go come back and go over some stuff for tomorrow and the afternoon and kind of see what we can see what I can get into. So Ford pulled back and held this. Dude, I really think, guys, I really think you could see transportation like Ford, Tesla, GM. Like, I think we could see this thing up here in the coming months for some, you know, whether it's because it's summertime and you have construction, people going out and about. I don't know. I just, maybe this is where, and again, like I brought up last night, maybe it's more on chasing yield and trying to chase yield and upside in the markets instead of going to treasuries. You know, yeah, you're going to get like 4 or 5%, but or you're going to get 5, 6%, whatever, depending on the time in the month or whatever. So what I think they're trying to do here is like you may see institutions start going to like Ford has a 4% dividend, I think, 4.5. No. I think it's 4%. It might be like 4.5 roughly, but they have a 4% dividend, and you could probably catch some upside with it. So I think you're going to start seeing institutions buying these. Transportations look like this, which is the futures, TRAN. They do have a Dow. I think it's like DJIT or DJT. Trump Enter Frax, huh? Trump Entertainment Warrants. That's so funny. My boy Trumpy. D. 30 covered call. I don't know. I have to find it. Because I know there's a transportation that we can trade in the equity markets, and it's not, futures contracts. DIA. See if it'll give it to me. Bastard. I don't know. I'll have to Google it. I think this is where the next, of course, it's got to get above this. It's got to get above this resistance. It's got this SPY. I got a fresh cup of good. Yeah, I might hold these last 2 contracts. I was thinking to myself, I'm like, I should probably just get rid of them because I don't even want to be in anything, but they're so small, which is like what's good about a stock like CCL. Like if anybody has a small account, like stuff like CCL and Ford, like they're not volatile, and you're going to be like, especially if you're new, like you're not going to be sweating and like, not that you should be sweating, but you know, the nervousness and all that. Like, look how, you know, you could have your stop, like I said, right here is the range. This is my range. It breaks up above here. This is my stop, depending on how it gets there, depending how it breaks this level. Again, I've been doing this for a little bit, so I can kind of like instinctively have a gauge on like what happens here. Doesn't mean I'm gonna be right. I'm not saying I know every move, but I may not have to wait to stop out up here, is what I'm saying. I may not have to wait for it to get to $15 flat. If it breaks this with a huge increase in volume like you're getting now, it's not huge, but it's an increase in volume. You know, maybe I'll just cut it because I'm already a little green. It's not much at all, but it's better than nothing. This stock hasn't even made the move. I'm just wondering if the 16-15 area is the sweet spot. But there you go. That looks like a small. It's probably one of your last. See, it's just going to float. It's just going to consolidate and then wait for the next move. So you have continuations and consolidations in stocks. You have a trend continuation and a consolidation. It's usually one of the two. It's either consolidating or it has a trend to it. And whether that trend is to the upside or downside, it doesn't necessarily matter. There we go. But this volume's got me worried. Let me look at the 3-minute. That's probably why. Nah, okay, that's why. Yeah, I don't know why the 2-minute volume is like so weird and misreading. I still like the weakness on Carnival Cruise, CCL. Again, like a stock like this, it's gonna take its time. Could be your lunchtime breakout for the SPY. Ultimately, that setup on IWM is beautiful, man. Even just from this point here on the 15 minute, this pullback, that pullback and hold, that was a nice long. If anybody caught it, I know Collins caught it this morning. Like, he was on it. Yo, this team, we're putting together a great team already, dude. Look at that. That's a beautiful break of the high with an increase in volume. With an increase in volume there, boom. You pull back on lighter volume, and that is kind of big sell up here. So you do want to watch up here. You want to see what happens up there. But still, man, this is kind of textbook in a sense. You know, it's textbook, and it holds. Holds there at 184. 184.79ish, but this is textbook, man. It breaks above, consolidates, pulls back, looks to be on lower volume. You know, the actual pullback right here holds on lower volume, and then boom, you get your breakout. This could be a false breakout, though. We'll have to wait and see. All depends on these numbers in Powell, but that was a good trade this morning. Did it have a lot of meat on the bones? It could have. Because look at this break, pullback, and put the trade on. Yeah, look, the volume's decreasing. See what I mean? This volume's decreasing, bro. See how small this volume is off the bounce back, these two candles that are theirs? See the break, the pullback, and this candle and that candle? Look how low this volume is. Look how low that is. It's not good. It's not good. So it could be a failed breakout. But again, it told you up here, or up at the, 190 area, that there's a lot of sellers still sitting here. Look at this volume. Look at that volume. It's just insane. See? You just about had it there too, but still, it's still pretty damn high. You know, you have 1, 2, 3, 4, 5, and then one green candle, and then 1, 2, 3 cells like with low volume, but you know, it's called technical analysis, man. You know, it's everybody reads the same, everybody gets the same chart. It's just how do some people make money and others fail? You know, it's probably because there's something about the chart they're not understanding. It's not that they're not understanding, they haven't like been told psychologically like to look at it that way. Like AMD was a perfect example. Like if you're on a stock that doesn't have news or anything, you still want this thing to have legs. You know, you want that stock to have legs to give you the best chance to make more when you're right and less when you're wrong. You know, and the only way to do that is to get something like an IWM that when it broke these highs, look at the upside that it had. You know, look at the upside it had. Once you broke this base, like that's a little bit. 80 to roughly 86, and it's $6. It's still. So that's all. I'm gonna go around and go over some charts. I may end up passing out at like 12 or something because I'm so done. I'm so done. I don't know if it's like I said, the funeral, my little cousin, or what. I'm just exhausted. But I will still be here all day. You know, at least the charts of it. If I do end up falling asleep, it might be for 15, 20 minutes. If that, because I have to get, you know, I'm not going to sleep all day and go through this. not being up in the morning because I have to get up and get ready for this week again. Like I said last night, I'm ready to attack, man. I'm ready to attack. There's the target on CCL. saying AUD is another one that. So I think you might get some. You might get some small caps starting to show themselves. Great job, T, on this CCL. It needs some more time to make this thing like a nice trade. It's going to move slow. It's what it does, but he said it. Yo, short CCL. My boy came on here, stuck his neck out and said, you know, this is what it is. And so far, you could have just caught a small, nice trade on this. Nothing major, you know. You got a nice base hit going into Powell, CCL. Get your confidence up, you know. I mean, Colin over here talking about hitting the IWM upside and downside. Like, the opportunity's there, guys. The opportunity's out there. So I expect it to start slowing down. Like look at CCL's volume. It just dropped off a cliff here. So I'll probably be out of this for right now. And then when it starts to give us some continuation. So why is VWAP? Okay, there it is. So what I want to show you guys is that maybe this is the next leg up for CCL with. It's hard to say. I don't know, but
Wall Street Journal reported Grubhub to cut about 400 positions.
Grubhub. News out on Grubhub cutting 400 positions. I want to say the VWAP in the 23.6 fib is right in line with one another. So keep an eye on that. If it does try to give it, you know, if the shorts just, you know, sell this thing because it's not going down in the manner they want it to go down or what. But usually they have leaps or time, you know, when they short this thing. Yeah, man, I didn't expect to get a trade on today, and I did, man. Thanks to the member. That was nice. So I think Baba in like China, for instance, is going to start with their quantitative easing. Um, I think they're starting.
We're getting a pop here, Tango Uniform Papa.
Um, I think they're gonna. I think at least from what I heard was that they're gonna that right now they're starting to like do like stimulus and stuff to get their economy going. Um, I don't know. I thought they already started that, but I guess not. I don't know. I have no idea. So I would keep an eye on Chinese stocks or Chinese ADR as they're called.
Airbnb,
Airbnb up a nice 4.5%. I'm gonna run through some stocks here. I was kind of just going through some stuff, but I'm here if you guys have any questions or anything. Gets warm in here, man, with this computer and stuff. Or like, just everything I have running, man. It gets fucking warm in here. I wonder. Why is this not? Yeah, man. You too, bro. You have a great day, man. They have a lot on here, like on CNBC right now.
How do you regulate that, though? That's a difficult thing.
Yeah, you just gotta watch, bro. You gotta,
that
it was
everybody's
such a
trying to
small
have,
day today, too, though.
but it'll be transformative. So when I talk about this going through this time,
Alright, so
warp
I'm just trying to
to a new
figure this
reality
out
that's
real
gonna
quick.
seem
Let me,
very different,
just give me one
that's
second.
that's part of it. It's all of those five forces when they come together that are going to take us through that time warp. And so, again, how do you invest in that? To understand how to diversify well. I would say as a generalization, debt is not a good investment. And those who benefit and know how to use AI to turn that into their productivity are very attractive investments.
Has it changed the way
Alright,
think
so
about
you
that?
can hear it without, when I have this off. I wasn't sure, because it was like, I wasn't hearing it.
Because they also make
Alright,
it
so you-
disruptive. But the effective users of it,
Like what? Like who?
well, in any of your domains, I don't care if it's in biology hospitals, I don't care if it's in agriculture, there will be those who understand it and know how to make the most of it, and there will be those who will be slow to make the most of it. And those that are able to make the most of it will be the disruptive companies.
So it brings us to China, and I finally do want to ask about this because you've been there for years, and you've just been there recently as well. And we're all wondering, I mean, we see the worsening of relationship between the U.S. and China, see what's happening with Taiwan, wonder about where all of this is going. What can you tell us?
So major, very big changes and very big conflict. There are a number of issues.
Great job, though, bro. Great job, man.
Headline issues that are borderline issues. Taiwan, chips, investing there. Russia, each one of them, they're red line issues. And they're unable to talk. I mean, there's almost counterproductive. Everybody's blaming each other, and it's
You warned in
counterproductive.
LinkedIn that we're on the brink of war.
So you are on the brink of a war. Now, first, economic war. We're
I
certainly
wouldn't
on the
necessarily say like a
brink.
number. Like that's like that's where trading comes in. This is where you got to come in with like I know what you mean though. Like if you're taking like losses and you get a couple wins and it's going back and you're just like break even. This is where you're going to see where trading is where people say that it can't be done because they say they lose money, this and that. You just have to like, like you can't expect to like perform great when you're in the ring with professionals. You know what I mean? You're in the ring with, the John Jones of the world, It's like the Barry Bonds. Like, so it's it's not that you can't get your portfolio up. It's like you just have to just sit on your hands and wait and be patient. Like today, like I there's no way in hell I was making a trade really. I did just start on a small trade because it was CCL and it was $14. Contracts were probably they weren't probably, they were. I think I got in them around $13-14 a contract, and it was like $14 I think is what my fill was when I got in these puts up here. Where's like right here I think. No, it was right here. So you gotta just wait and get like the momentum. Like you gotta get like a Carvana like Friday and Thursday and Friday. Like this like little movement from the IWM and SPY and stuff. Like this stuff is like what's gonna happen is if it doesn't work out your way, you're gonna lose and like you're gonna just get premium burned and you're not gonna make any money. And then like you just want to get on the I'm trying to find something that was like gave you like an extension, like if you were on CCL long this morning, like that's going to bring your account like up, like XPEV on that ride up. It looks like it's putting in, and like CCL or like these are the trades that you want. That's going to get your account growing. You know what I mean? Like being on this, Okay, instead of being on like this little downside, like that I just hit for a scalp. I could have thrown a ton of size at it, but if it didn't go my way, it just doesn't make any sense. That's all. Not, I mean, like I said, not, I mean, I don't know. I think they went to like 18, 17, 18, so it wasn't much. It hasn't moved much. You know what I mean? I called a 50-cent move, 25-cent move. You know, it was so small, bro. It's okay. It's just I put on a little trade, and look, it's breaking out. So I'm already stopped out because I don't even have to look at it. This was my trailed stop right there. A close above that. So, and it may be up here, but I don't even want to give it up there because I've already taken the position off, and I've taken off profit. So, anything that happens from here on out, I could lose the last two, and I would still be okay, or the last one. So, like I said, I just wanted to put something on to just get in the driver's seat and kind of like take a lap around real quick, and you know what I mean, just warm up, getting, you know, like just being able to look at the chart and like picking where I want to get in, where I want to get out, where I want to stop out. So I wasn't even worried it wasn't even about making money on that trade. It was more about getting my entry, my exit, reading the chart. You know what I mean? They're talking about Carnival right now. And it's like you got to think too. If you buy a contract at 10, 15 cents and it goes to 30, that's 100%. And it's like you got to think too. If you buy a contract, I'm trying to figure out what happened here with this fucking CNBC.
That's when you start seeing people start raising.
Can you hear it, bro? So like I can hear it on my AirPods.
Talking about this for a long time of potential candidates that's out there.
Shit. Can you?
It's companies like Reddit, for example.
Can you guys hear CNBC? All right, cool. Okay, I wasn't sure because the laptop, it's not playing on it on this side of the screen. Like I have it in a little box to make sure that it's livers, or like so if something goes wrong, I can see it. So the sound wasn't coming through, but all right, yeah, I can hear it in my AirPods. I just didn't know if it was just playing to my AirPods from the whatchamacallit, my monitor.
For the rest of the general market.
I think we're going to have to talk about this on ETF Edge in the next half hour, but I think that they're going to start saying now, once you start raising prices for IPOs at a couple days before, that's a sign that people are...
I wonder who they're going to have on at lunchtime. If they're going to have like Joe Terranova. I want to see who they have on the lunchtime. I usually like watch CNBC during lunchtime and then like in the afternoon.
Eyes on Carnival and all the other cruise lines as well.
Look, CCL breaking out. Like I said, I think CCL's. This was a good long because there wasn't no volume at the time, but it's got just pulled right back to the VWAP. The VWAP line right up with 23.6 fib. Bang! Look at it. Look at it making the second leg higher. Look at the volume. Yep, Joe Terranova's on. He's got an ETF.
So we are green across the board on this Monday. There's the S&P 43.13. We're on a 4-week win streak, as we said. We re-entered that technical bull market on Friday. That means up 20% from the prior low. Dow on pace for its best month since November. And Joe, here we go. CPI, we got a Fed meeting. And presumably everything else, retail, and we're going to see how this market trades once it got into this, you know, alleged new bull market.
Alleged bull market. Well, certainly a technical bull market. Once again, the NASDAQ surging hard. And by the way, you could confirm both fundamentally and technically that the NASDAQ is a bull market. CPI tomorrow, without question, I believe we have priced in what we are going to see over the next 2 months.
I'm so ready for this week. I'm so ready for it. You guys have no idea. I'm so flipping ready. Just hearing him talk about CPI and shit.
And then June's 1.2 month-on-month higher. So, Scott, you're going to be in the 3 to 3.5 range for inflation.
Is that good?
In June?
Is that good for the market?
Well, it's priced in.
That's all I want to know.
No, but it's priced in. It's priced in. So where do we go from there? How stubborn is the 3 to 3.5 level for inflation? Because let's remember something. When you see the inflation reading tomorrow, and you see the
That's exactly what I said, was that it's priced in already.
that it's about fresh incoming inflation data. It is about the base effect from last year. So even if you get to that 3 to 3.5 level, how stubborn is inflation? That's not priced into the market.
Okay, Weiss, 8 months ago today that the S&P 500 hit its closing low. 8 months. So we've been on this move.
So if it's already priced in, right, and we are expecting there's a chance that the Fed's pulling back. So if we know that the Fed's possibly going to pause on interest rate hikes, CPI has came down. How do you get ahead of this pricing in a cut, or not a cut, but a pause? You have to it's about it is about timing, but the week prior, on that breakout, you want it to be long because of those reasons and knowing it ahead of time, and you'll catch the price in. So next time we have an event, let's see how we can put ourselves on the right side of that move on what the sentiment is and catch it. We're going to put it on before it happens. And it, in a sense, that's front running a move, but you can also let it tell you that what it's going to do. You can read the chart, read all your indicators, and kind of get ahead of that move and get it and get the move.
It's never any different. It's always different. It's different.
I was calling out the SPY's upside move off of this wedge. It happened so fast right here. But the retest, look at that retest, bang.
I don't think so as far as the market goes. As far as the economy goes, it's a different story. But you've really
look at that. That's beautiful.
What's happening with the economy, which is slow.
Well, you know what?
This was way too quick. This was literally 15 minutes. You were up 5 points, and it was I'm not chasing that. So you had a 2-day run, a 2-day consolidation, and then you had your 2-day pullback. So 2, 2, 2. The rollover. So keep that in mind too. Kind of expect that. You get a continuation day, and you get another day of a day or two of consolidation. And if it cannot break higher, then maybe you're going to roll over. Especially when you have a pattern though. When you have a pennant like this. When you have a pennant like that, and you broke out to retest it. So you kind of got to use it all. What's the pattern? It breaks out. You look for the pullback. Go for the long. And then your risk to reward too. If it doesn't hold it, which it will, if it breaks out on volume, which it did, broke out on volume, and it pulls back and holds it, you can almost depend on it. But your risk to reward is going to be if it breaks this low, right there, it breaks that low, then you're out. Your risk to reward is great. You've minimized your loss. You put on size, you minimize your, because you're getting it in. You're getting in at it's either going to break out higher or it's going to break out lower, and you have your margin of error is minimal.
30, 40 years, and they're saying, you know what? In my lifetime, my investing lifetime, as long as I've been aware of the market, every time the market's going down, it's going right back up. That's not been wrong. Any stock you buy, you say, to your book, right? Buy high, sell high. Anytime you buy it high,
Dalio's an OG, right?
Yeah.
He's an OG. He said just a few moments ago, I see a financial crisis ahead. He's worrying about the debt bomb and
I don't think that's off the
and
table.
all this other stuff.
I do not think that's off the table. Look, commercial real estate, you're going to see $1 trillion. It's got to be refinanced not that far away from now. So to think that, okay, hey, we had Silicon Valley Bank, we had First Republic Bank, man, that's the blow up. Oh, wait, no other banks really blew up. Nothing's happened. No, it's because the leases haven't ended. People haven't walked away from their leases. That's going to happen. The question is, can we absorb
I understand,
it?
but Bryn, we're 20% off of the low, as we said. Steve Sutmeyer, Bank of America's technical strategist, says cyclical rallies in excess of 20% can persist. And he goes back to 29. These cyclical bull markets have lasted 33.6 months on average.
Looks like we're trying to curl up, guys, on the 1 hour. You see that? We held pre-market lows.
Something here? Have we traveled too far from the depths of where we were to turn back now?
I think that this technical bull market, whether it's cyclical or secular, gets really tough for the bears who've been sitting on the sidelines. Scott, if you go back to 1946, so a treasure trove of data, when the S&P is 20% off its lows, the 12-month average return going forward is over 16.5%, and 85% of the time the market was positive. Now, there was 2 exceptions in like 1948 and 2001, but if I'm in Vegas and I have something with 85% probability, I'm probably going to bet on that. And so I just think this market in the short term, because I think what Joe said is really important about inflation will have a 3 handle by August. That is very bullish. The Fed tomorrow, as Roger Ferguson said, does a hawkish pause. And so I think over the next 3 months, it would be really nice to see a broadening out. I don't know if that will happen, because ultimately the broadening out would be in the cyclical sectors. And for that to happen, you would have to say the economy is improving. And my
There's
issue
your
going out the next
CCL.
6 months is that I could see at the end of the year, we have GDP at 1%. We have inflation
It's
around
either going to
3.
pull back, hold,
We have
go
Fed
higher,
funds
or
at
this is
5,
it,
and
double
we have a
top.
regional banking system that I don't think can handle 5 to 5.5%, because to Steve's point, we're going to start having a wall of refinancing in 2024, which gets even bigger in 2025. And these regional banks, I know they don't matter to the S&P right now, but they are the oil in the economic engine of the U.S., and I think they are limping along here. So I feel good over the next 3 months, but I definitely get murkier and more bearish or cautious as I look out at the end of the year, as I do think GDP will decline because of the regional banks.
Joe, we had this conversation the other day in terms of who's in charge. Who's the new sheriff in town?
NASDAQ.
Are the Bulls now in charge, or the Bears still in charge? Barons, don't fear the bull market. Why stocks are headed higher. The case for optimism as a resilient market continues to disappoint the Bears.
So this is David Kostin's thesis versus Mike Wilson's thesis, and I think David Kostin ultimately will prove to be right. I think the market right now is blaring the obvious, and the obvious is technology is where the capex is. And I don't think you have to make this any more complicated than it needs to be. We're trying to figure out whether or not the consumer is going to stay resilient or not, and where do you feel the effect of the consumer most in the cyclical trade? Where right now is positioning in the cyclical trade? Caught offside still. Just look at energy. It's down significantly today. I wish I could sell my energy holdings. I'd do it in a flash if I could. So don't make it so complicated. It is technology where the capex is going to be, and you don't have to delineate between whether the consumer is decelerating or whether a consumer is resilient or not.
The consumer is resilient. You just have to look in the right place, because it's a tale of 2 markets, which we're going to get into a little bit later. There is Mike Wilson, right? And I mean, he's been the bear. He's been the bear to speak of. He says the bear is still alive based on our
I think we got to watch also the we got to watch end of day. And what does the end of the day bring for us?
What do we
All right, because you're going to start to see some positioning for CPI tomorrow, and I'm kind of curious if this bottom hold of the pre-market is kind of a sign of a front running that move. So,
yeah, but at some point, don't you got to move off this and you say it's kind of tired at this point?
Yes.
Why? Why is it tight? The facts are the facts.
Dude, why is it doing that?
I mean, the S&P 500 is at 43.14.
The average S&P stock, Scott, is up 3% this year. okay, after being down significantly more last year. So is that recovery? Is that a bull market?
So what do you want to say? He's right?
I'm saying his view has been largely right. Look, there are two things, okay? We can either say only focus on the indexes, that's all you're going to do, then we can all go home and play replays of Undercover Boss all day long. That's not what it's about. It's looking at what's underneath the market. If you just want to be an index investor, that's very appropriate for a lot of people. But professional investors like Joe and I, we've got to pick the right stocks and we've got to avoid losing money. And the right stocks have been basically away from the 7 stocks. There have been others. So buy Deere when it's down 30% and you can make some money. Buy others.
I know, but
to
that's
say we've been
the problem with calls like this is they become too nuanced. Oh, I am really right because the earnings aren't great, and Weiss just told you all the stocks underneath the surface aren't doing well. It ignores.
You tell me what's more nuanced.
The train that's run.
You tell me what's more nuanced. 7 stocks. I'll give you maybe 10. I can't think of the 3 out of 500, or the average of 500 stocks, the S&P 500. What's the nuance? 10, right?
Are they the 10 largest?
Well,
are they the 10 largest?
They got that way. It's self-fulfilling prophecy.
But they are going.
It doesn't matter.
But they're Steve. They're going to support earnings. So the theory about returning to let me finish. October's lows. Right. Earnings are down. Correct. Earnings are down. Consensus for 2023. Earnings down 2.5%. To go back to October lows, you have to see earnings down 15 to 20% on the year. And if these technology giants are going to deliver the type of earnings that they have, I don't see how you go down 15 to 20% in earnings.
That's what
I'm saying that he's right in the ultimate ice or winter, wherever he calls it.
I don't. It's going. That's what I was saying last Friday, Thursday. That it's going to be extreme. Like there's going to have to be something like really wrong or something for us to see the October lows or get anywhere near there, like 370s, 365, 375, that area. You're gonna have to have something happen really bad. I feel like, you know. And we could always get it, but, you know, we'll just wait and see.
I think
so the bottom chart down at the bottom left of my screen, that's the S&P. This is the October low. Look at the volume that came in and bought it right up. It's not going to be that bad.
You really haven't seen. You've seen small caps move in 1 week. But that's not a rally. That's just like shorts covering.
Well, really, nobody knows. Nobody knows what's going to happen, but chances are it shouldn't get that bad.
Was the zero. This year you've had a total flip flop, and so I think these extremes of like 4,800 to 3,600 just are not ways that one can really invest off of. And so you have to put together an asset allocation, because otherwise you've just literally followed the wrong person this year if you followed Mike last year, and you've just missed this whole move. And so I think ultimately you're going to continue to have tech move higher, because that is where the sentiment is. Multiples will not change until there's an event. I will say, though, outside of NVIDIA, which absolutely raised their guidance in the most historical manner ever, we haven't seen huge raises from the other tech companies. This has all been about multiple expansion.
Well, that's Tony Sacconaghi, what he says today.
You're going to have to have.
I'm sorry, that's what he says today. It's all multiple expansion. It's not earnings growth.
And he's absolutely right, because if you take a look organic away from NVIDIA, which had an unbelievable raise but already overvalued, the companies have not deserved the multiple expansion. It's just capital that's looking to go to names that they know, names where they can be protected, names where they have fortress balance sheets, and global businesses, global franchises, brands. But that's just not, you can't tell me that the multiple on Microsoft, even though I own it, okay, there's a lot of potential AI, has deserved to go up 50%. Can't tell me the multiple on Apple deserved to go up as much as it has. Of course it hasn't.
It's not just Mike Wilson, by the way, who's negative, and we don't mean to single him out. It's just he's been the most vocal of the negative strategists. I think Jonathan Krinsky's the technician at BTIG. He says the reports of the bear's death have been greatly exaggerated. So you're not willing, Jonathan, welcome back, by the way, to suggest that this new bull market is legit.
Well, yeah, I mean, I think you guys have brought up a lot of good points, but as we hear the choir of new bull markets becoming louder because the S&P is up 20% off the October bottom, what we want to do is look at a few different things. The first is, have we seen 20% rallies within bear markets? And the answer is clearly yes. It may be more the exception, but we saw it in 08, we saw it in 01, we saw it in 1947, 48, we saw it in the Dow in the 60s, and obviously the Nikkei had many 30 to 40% rallies over the course of its secular bear market. So that's the first part. The second part is we want to see, okay, if we are in a new bull market, are we seeing the signs from breadth and credit that we historically see in new strong advances, given that, you know, we're 8 months removed from that October low? And the answer on both of those is no. You know, when we talk about percentage of S&P making a 52-week high, given the S&P did make a 52-week high.
So there's news here on
we've yet to
Activision.
see more than 6 or 7% of the S&P make a 52-week high. Historically, at the 8-month mark, you've seen at least a handful of days where you have 20% of the S&P making a 52-week high. And then finally, we get to the credit side of things. And if we look at credit spreads like BAA versus BBB versus Treasury spreads, they're actually 20 basis points wider than they were in February. Yes, they've tightened a bit off the October lows, but you know, typically, again, 8 months into a new advance, you're going to see credit spreads tighten significantly. We just haven't seen that. And so, you know, to the points you brought up, we've seen
There's a new high on CCL.
We've seen credit divergences, and those are two pretty big, important things that we typically don't see at this point in a new bull market.
Okay, but to what degree, if any, does time account for something, and at what point does it trump a lot of the other stuff that you said? If you're 8 months off of the closing low, the further you get away, I presume, the less chance there is of going back.
Well, again, you got to look back a little bit more throughout history. You know, the 2000 and 2008 bear markets, the 20% rallies were very sharp and quick, so we've exceeded that. But if you go back to the 40s, 50s, and the 60s, like I mentioned, I mean, for instance, the Dow in 1966 had a 2-year rally that exceeded 20%, did not eclipse the previous high, and then went on to make a new bear market low in 1970. So, you know, we've seen this before. You just have to go back a little bit further. So I do think, you know, an 8-month bear market rally seems a bit unusual for most people because we haven't seen it in the modern era, but history tells us that it can happen. And by the way, you know, the 60s into the 70s was another stagflationary, inflationary environment. So, you know, maybe it is more analogous to what we're seeing right now.
But I just go back to the idea of what Mark Zandi puts forth, as others have as well, that maybe, in fact, this time is different. If you're looking for any historical precedent to make your case on either fundamentals or technicals, you're always going to be able to build a narrative one way or the other to support your story. I think we've learned that. However, maybe this time, in fact, is different. Maybe this time is different. The market and the economy are not going to react. The relationship, as Mark Dow has suggested, between interest rates, the market, and the economy is different than what people thought. Maybe we walk away from this period saying we were wrong.
Yeah, look, you know, every period's different, you know, but every type of analysis is using history as a guide, right? Whether it's fundamental or technical. So I think there's a lot of things that are different this time around. And, you know, look, I'll go back to what happened last summer when the S&P had retraced 50% of its bear market decline. And there was a lot of talk about how that had never happened in a bear market back to 1950. And what happened? It went on and broke new lows in October. So again, if we had gone back further throughout history, we would have found out that it did in fact happen prior to 1950. So, you know, I think looking at, you know, a wide range of historical analogies is helpful. And I think just, you know, looking at the recent data set may not be, you know, the best evidence of what's going on right now.
All right. I appreciate you joining us, Jonathan. Thank you. Jonathan Krinsky, BTIG. I mean, one thing, neither the Bulls nor the Bears are backing down off of their perspectives on where this market is going.
Yeah, and I just wonder, you know, we look at everything through the optics of it being so binary. It's either we take out the January of 2022 highs or we break down below the October lows at 34.91. There's a high probability that much of the work so far year to date has been done already for the S&P, and that we're not far away from where we're going to close out at the end of the year. That probably has the highest probability, and that's probably the least discussed because we tend to view everything in such a binary capacity.
Yeah, so and then there's Tesla, Bryn, which I wanted to come to you to. It's our call of the day. This stock is trying to go 12 days in a row up. Right now it has it. You want to know where momentum is within this market? Yes, it's in the Magnificent Seven and these AI plays, but this one has been virtually unstoppable for the last 10 days plus. I can't get Bryn's audio. We'll try and work on that. But, you know, Weiss, you get my point here. If you look at momentum is a powerful thing. 12 days in a row for Tesla. They got the new battery partnerships with GM and Ford. Those were, you know, perceived by some to be game changers, and the stock has reacted in kind.
Yeah, I mean, it's a momentum market, and if you get a little bit of momentum, you see it move all the way. You know, we'll talk about Oracle later on. That's another case of momentum. So the fundamentals don't even have to accompany the price increase. For Tesla, they've had some bunch of good news. The battery partnership, Musk also getting somebody to run Twitter so he doesn't have to divide his time as much. You're seeing more adoption. You know, the market growing bigger with EVs. But look, at some point, valuation becomes unreasonable. And at the end of the day, they haven't had to advertise ever in their history until now. Now they have to because you've got so many more choices. So I'm not buying it here. I missed it. You got to buy these things when everybody hates them. I didn't because I still thought it was overvalued at that point.
I think we got Bryn's audio back. Bryn, you were saying?
Yeah. Well, I just think everyone that thought this was just a car company continues to be surprised at the massive moat they're creating. I think as it relates to charging, the biggest loser seems to be ChargePoint, right? Because that is the only business model they have. And I just think that Ford and GM saying Tesla's technology, our biggest competitor, is the best technology. I think there's going to be more to come. Tesla's building a lithium refiner in Corpus. They've got their own AI chips. They stopped using NVIDIA in 2018. Batteries are going to be, probably could be sold to other companies. And so I just think this story continues to get better. And I think, you know, Elon continues to play 5 games of chess against all sorts of different competitors and comes out on top. And I think the stock price reflects that.
Playing chess, and you're still playing shuffleboard, Weiss.
Hey, man,
you and your buddies.
I'm not even
Tiddlywinks. It's playing tiddlywinks.
Yeah, I'm playing that's right.
All right.
Hopscotch.
All right, up next, we're going to do our call of the day, our chart of the day, excuse me. It's Oracle. Those shares hitting all-time highs ahead of earnings in OT. We've got you set up next. We're back on the half in 2 minutes. There you go. Nice gain for ORCL, up better than 6%. to our chart of the day now. It's Oracle hitting fresh all-time highs ahead of earnings tonight in overtime. Joe, this thing's been a monster. New 52-week high, as we said, up 89% off the 52-week low. Good on Josh for signaling this thing was ready for a breakout several months ago. Jim Lebenthal's an owner of it, too. Neither one of them around today to join us, sadly, but they will comment on it, obviously, the next time they're on. But what should we look for here?
So I think Josh did a good job identifying that momentum finally came into the stock. The momentum had been missing. This is a stock that in the last several years has been a complete value trap. This is a stock that has never really been a candidate for our strategy because it fails so miserably, believe it or not, on the quality side. This is a company that over the last 36 months has only had 2% revenue growth. This is a company that has extremely high, not to this regard, extremely high debt relative to its equity. And it's only more recently that you're seeing the free cash flow generation. So this was a classic value trap, okay? Now you've got the thesis that free cash flow generation is slowly beginning to rise. You saw a better quarter, 17% sales growth, and you have the AI story. And what do you get? You get the momentum, which you like.
Upgraded to outperform at Wolf. The target is 130, Weiss. Heroes get remembered, legends never die. That's what they say today.
Kind of interesting. We know he hasn't spoken to the company for 2 weeks because they're in their quiet period before earnings, right? 2 weeks before the quarter ends. So why upgrade it? Well, you upgrade it because in this market, if a stock does better than what earnings are forecast to be, what guidance is, it's up 20%. 25%. So you make the decision, do I want to miss that if they put up another good quarter, or do I want to come in and sort of roll the dice, recommend it in front of the quarter, and if it trades down, you know what? It's a market that's looking for these kind of stocks, so over time will be okay. That's the reason for the upgrade. It's just playing a little bit of chess. It's tactical. Look, Oracle's always been a fine company. It's been a slow grower. It's been old technology. Maybe this is their time. AI is going to do a lot for companies that can afford to spend on, that can afford the R&D, and that already have that embedded customer base where they can expand their product offerings.
Rin, it's kind of tough when you got a stock that's up near 10% in a week into a number.
Yeah, I mean, it's interesting. Like the PE's around, the forward PE is only around 25. And so if people are looking to say, hey, where's a name? It's up 45% year to date. Where's a name that's not expensive? If, to Joe's point, they can grow, they actually have a growth trajectory, I don't think they're going to pull an NVIDIA. By the way, I don't think even remotely you're going to see that type of number. But I think as people are chasing these different names, if they come in stronger after the print, I think the name could easily pop even higher.
All right, let's get the headlines now with Contessa Brewer. Hi, Contessa.
There, Scott, good to see you. Here's our CNBC News update now. A source familiar with the matter tells NBC News Fox News sent a cease and desist letter to former anchor Tucker Carlson. That letter alleges that Carlson breached his contract by starting a show on Twitter. Carlson parted ways with Fox News in late April, days after the network agreed to pay almost $800 million to Dominion Voting Systems to avert a high-stakes defamation trial. The chief of the United Nations says he thinks Russia will back out of the Black Sea grain deal in July. That could mean real problems for exports. Over the weekend, Moscow expressed dissatisfaction with the deal, which allows for the safe wartime export of grain from Ukraine's blockaded ports. The current agreement expires July 18th. And the most active volcano in the Philippines is spewing lava today. It's prompted the evacuation of more than 13,000 people who live within a 4-mile radius. Authorities raised the alert level for the volcano Thursday. They warn there could be hazardous eruptions within days or weeks. Dangerous, but pretty amazing to look at, Scott.
Yeah, no doubt. Contessa, thank you so much.
Sure.
That's Contessa Brewer. All right, here's our, well, that's not it, actually. What are we doing here?
Guys, check out Novartis.
Up next, the great thaw, the IPO
And then you have the news with like I-95 and stuff. You can see what sympathy place there is for that.
CNBC.
And welcome back to Halftime Report. I'm Bob Pisani with today's ETF Edge. Green shoots for the IPO market. The great IPO drought has gone on for 18 months, but some are hopeful that may be ending. Fast casual restaurant Cava is scheduled to go public at the New York Stock Exchange this Thursday, and this morning raised the price of that proposed IPO. There is a long list of companies that have been waiting to go public for over a year. IPO watchers are hopeful that with the market rising, the great IPO drought may be ending. Let's talk with Matt Kennedy. He's the senior IPO market strategist for Renaissance Capital, which runs the Renaissance Capital IPO ETF. Matt, good to see you. It's often said the most important precursor for a return of IPOs is a strong stock market. S&P's near a 52-week high. Is this the moment we've been waiting for? Is this what it takes finally to get the IPO market back on track?
I think so, Bob. Great to be here. We're now in the second year of that severe IPO drought. Proceeds are about 1/3 of a normal year. However, we do see a light at the end of the tunnel. All the pieces are in place for an IPO pickup. And I think the most important piece that we look up at is returns. The Renaissance IPO Index, which is tracked by our ETF, is up more than 25% year to date. That's double the S&P 500.
Yeah.
So, outperformance is the fuel that powers the IPO issuance engine.
Yeah, a strong market not only lifts stock prices, it lifts the potential valuations of IPO candidates. That's exactly what we saw today with Cava. The proposed price was 17 to 19, and now it's 19 to 20. Is that also going to get the attention of other IPO candidates? Is that also going to help?
I think so, yeah. I mean, that's basically it. That's the two sides of the equation. Investors, on the one hand, they need to make money on IPOs, and we are seeing that with the index. And then on the other hand, the issuers need to see that they can get a good valuation. And I think, as you mentioned, Cava shows that they can.
Yeah, you mentioned Renaissance Capital running the IPO ETF. It was a disastrous 2020, let's face this.
Getting around it.
As you mentioned, it's beating the S&P, up 25% versus 12% this year for the S&P. But the major holdings are all the holdovers, the old tech holdovers. Snowflake, for example, Airbnb, Palantir, DoorDash, all of that's benefiting from the tech revival. Can we get a broader rally in IPOs other than just, a few old tech IPOs?
Yeah, I mean, our index holds the largest and most liquid names over the last 3 years. So that includes some of those large tech IPOs from years ago, which, they are benefiting from the current AI revolution. They're clear beneficiaries, Snowflake, Palantir. Now, will we see a broad-based pickup going forward? I mean, we are hopeful. We've looked at studies, and studies have shown that it is now, during these times, these slow times, that companies need to go public at attractive valuations with strong fundamentals.
Right.
And I think that's what we're most excited about.
Yeah, there is a long list of companies to go public. Fogo de Chao, another restaurant company, Reddit, Instacart. There's the big semiconductor giant ARM. That could be the biggest one of the year, but we've got Panera Bread, Stripe, Impossible Foods, Fanatics, StubHope. There's many others that are potential hopefuls that are out there. There's the potential list. Anybody who might be likely next on this list?
Well, if Cava does well, and they did raise the range, we would expect to see more restaurant IPOs. So you mentioned the Brazilian steakhouse, Fogo Hospitality. There's a Korean barbecue restaurant called Gen, Panera Bread. Beyond that, we do see some industry-specific tailwinds in biotech and energy and insurance. But yes, ARM should be the headline IPO of 2023, raising up to $10 billion. It's going to be a whopper.
Okay, we're going to have a lot more on the IPO market coming up at 1:10 p.m. Eastern Time. That's ETF Edge. Plus, we'll talk about the state of the markets and this curious lack of inflows into ETFs this year. What's up with that? Todd Sohn, head of ETF and technical strategy at Strategic Securities. Kyla Scanlon, founder of financial education company Bread, will be joining us. That's etfedge.cnbc.com. Scotty, back to you.
All right, Bob, thank you very much. Bob Pisani. Up next, a tale of two discretionary sectors. We'll tell you what's driving the action in cruise stocks today and why the rest of that space isn't in the same boat. Halftime's back right after this. Welcome back. We have a news alert on Microsoft. Our Steve Kovac is right there with these headlines. Maybe not all that surprising, but still, when a headline like this crosses, Steve, we need to get some context on it.
Yeah, Scott. So here's what's going on. According to a source familiar, the FTC is going to file an injunction attempting to block Microsoft's $69 billion acquisition of Activision. Now, we know the FTC has already sued over this case, but that first hearing wasn't expected till later this summer. This is going to kind of accelerate the case, and I'm told Microsoft is actually welcoming this decision because it's going to get it in front of a judge much faster. We're understanding right now that it's going to be filed in a court in Northern California. We're still waiting for the exact injunction to come in and see kind of the rationale behind it. But look, this is still in litigation here in the U.S. The U.K. has already blocked a deal, the Competition's Markets Authority over there. And in fact, today was the first hearing in Microsoft's appeal against that decision. And the other major regulatory agency, the European Commission, has already approved the deal. So it's these other two that are still out there, Scott, that need to work through before the deal can go through.
Yeah, Steve, which is why, I suggested it can't be viewed as a major surprise, obviously,
not at all.
Given this administration's tenor and tone towards deal making. So, Steve, when you think about this, so they're appealing in the UK. They obviously, as Steve said, they welcome this so they can appeal the process here and have a formal process underway. Does this make you think differently in any way about Microsoft?
No, as a matter of fact, I was not Microsoft at all.
Because you don't own Activision.
No, I don't own Activision. I did own Activision. I traded for a little bit, and I just said, you know what, my downside, while this is working out, my downside's minimal, and my upside's $96, which I think is the deal price. But here's what I'd say. Activision put up a good quarter, the last quarter, so you could argue that the stock's not particularly overvalued here. As a matter of fact, maybe undervalued at this level. So that's why the stock's flat. So if Microsoft gets it, great, they got plenty of cash. If they don't, it just doesn't matter in my thesis on Microsoft.
Joe?
That's great analysis. And it really, at the end of April, when we heard from the UK, that's when we built in the fact that this deal was not going to happen. This is not a surprise hearing this news today. I agree it's favorable because it speeds up the appeal process. But this stock is fairly valued, and there has been strength and resiliency in the earnings most recently reported. So at $80, I think we're okay.
Is David good? All right, good. The crackle that we heard of the mic was you getting set up, which I'm glad you're here.
Sure.
You can't be surprised about this.
Well, no, and yes and no. There's been some weird chatter in the market of late, which was hard to make sense of, which is the following, that Microsoft was prepared to potentially close their deal in front of or without the FTC having obviously even gone to court to, it was an administrative law judge originally, and or obviously over the objections to the CMA. That seemed unlikely, but I was hearing that people who perhaps had heard it from Activision's CEO, that there was this possibility somehow they won't have to extend the merger agreement because they would have to fight the FTC and the CMA and the appeals process. And therefore, this idea somehow, Scott, that they would close around, so to speak, the FTC. Unlikely. My understanding is that was not ever the plan. Mm-hmm. But if you were the FTC and you were hearing this, you would want to get a temporary restraining order, and you do that by going to federal court. The process right now was to actually go in front of an administrative law judge. So it changes it, as I think Steve Kovac made clear earlier. Mm-hmm. You go and you get a TRO, you prevent them from closing the deal. Is it beneficial to Microsoft? It might end up being beneficial, but there are still a lot of hurdles, as Joe just indicated, for this deal to actually come to any sort of closure, namely beating the FTC, now in federal court conceivably, as opposed to an administrative law judge who, I don't even want to get into it because...
But that says everything, though.
Yeah,
and then you've complicated
it's so and then you've got to ultimately prevail as well in the appeals process that they are currently engaged in front of the CMA, the UK regulator, where there has been a lot of political pressure brought on the CMA of late by the Prime Minister and others saying it's being too anti-business, but still remains very much unclear whether that appeals process will result in Microsoft winning on appeal. So you've got two things out there. You've also got potentially, most likely, to have to extend the merger agreement, which is going to cost Microsoft more money, by the way, because Activision is in a better place than it was when they bought it so long ago, or when they announced the deal. All of which is to say a lot of complexity around it. This may help in some way simplify it. Now you go to federal court, you got one case. If you win it, it's unlikely the FTC is going to appeal you. And of course, Microsoft feels very strongly that it is in the right and will win against the FTC one way or the other. Still can't tell you about the CMA appeals process.
These are all, as you know better than everybody, chess matches.
Yeah.
And do you have any idea sort of what's going through Bobby Kotick? You mentioned the Activision CEO, Bobby Kotick, obviously.
Yeah.
What's his thought process at this particular point? What he thinks, if he ever really thought this thing was going to get to the finish line anyway?
I think he did. Bobby has not been returning my calls, sadly. But
come on, Bobby.
But that can always change. I mean, we've known each other a really long time, Bobby.
Come on, Bobby.
But what I have been hearing, and again, this is more in the realm of speculation, is that he is not looking somehow to hope that this deal fails and take control of his company again. In fact, that he is ready to say, this is the end of a chapter. This company is going to be in great hands with Microsoft, and he's ready to sort of move on. So that at least is something I've been hearing of late. But again, you're most likely, because the merger agreement expires in the middle of July. So let's call it a little more than a month from now, Scott. And Microsoft's going to have to pay them more money to extend it. And clearly will have to in order to both meet the FTC in court, here in federal court, now potentially in California, as we hear is a possibility, and of course complete that appeals process with the CMA, both of which remain very much undecided.
People, not every viewer we have follows M&A as closely as we do, obviously. Can you just speak to how this administration is being viewed in the realm of trying to make deals, and maybe one of the toughest hurdles that they've put up to get over it in some time? Certainly, I bet as long as you've been covering M&A, that this has to be one of the toughest FTCs, if not Justice Departments, to get over that M&A hurdle.
No doubt, Scott. Both the DOJ and the FTC under Lina Khan have made it much more difficult to even contemplate deals, certainly deals of size. And in part, I think what they have done is intentionally tried to chill the market overall for M&A, even though they may not be successful in prevailing in court. If this were to go to court, I think the odds are in Microsoft's favor to be able to prove its case against the FTC. That, at least, is according to virtually all the legal experts that I've been able to talk to over time. And in the same way that Amgen feels very strongly it will prevail, should it come to it, for its acquisition of Horizon, which also is being opposed by the FTC. So, yes, what it has done is chilled the market for M&A. It is literally the first thing you hear from every practitioner as to why companies are thinking twice. Even if they think they can prevail, the time it would take, the difficulty, the distraction, the expense, all adds up to fewer deals, at least right now, until and unless the FTC gets soundly beaten in court, which could change people's approach.
Okay. You know where to find him, Bobby. You know where to find
I'm here.
David, thank you for running down here.
Of course, anytime.
I really had to hear from you, given this news. That's David Faber. All right, we're right back.
PGA Tour.
Big day for cruise line stocks. They're surging today. Carnival, Norwegian, Royal Caribbean, all hitting new 52-week highs. Our Dom Chu right here at Post 9 with a look at why travel stocks are on the move. But it is really a tale of two discretionary sectors.
Absolutely. So the cruise stocks is where we jump off, because if you take a look at the action today, it is because of a couple of analyst upgrades. Bank of America, JP Morgan, all upgrading Carnival to the equivalent of a buy rating. You have a lot more of those moves upping price targets for Norwegian and Royal Caribbean in terms of competitors. The basis is fairly simple. Cruise trends remain good, booking trends remain solid, and there's better balance sheet flexibility and improvement trends going on there. What becomes curious, and to Scott's point, is those travel and leisure names and the outperformance that we've seen versus traditional retail. In this environment, in this economy, everybody's competing for consumer dollars. If you put up those cruise line operators versus, say, a Target or a Walmart, and look at the year-to-date divergence in some of those stocks, you can see where people are deciding to spend their money. And by the way, it's not just on the basic side of things for a Target and Walmart in terms of big box. If you put up, say, a Booking or an Expedia on the travel booking side of things versus luxury names like RH, Restoration Hardware, or even Ralph Lauren, the outperformance is market. So Scott, Joe, it goes without saying that this is a tougher economy for spending, but people are certainly spending more on travel and leisure, and investors are appreciating that particular thesis. That's the reason why it's such an important trade.
Why you should go Dick's Sporting Goods. That's pretty much it. No travel-related stuff at all.
Now, if you take a look at the airlines, despite every flight being booked and, ticket fares going up, they've really not done much of anything.
No, but the cruises, look at these names.
Cruises
Royal Caribbean's up 90%.
Yeah, and I'd be careful with cruises. They're coming back and raising equity to pay off their balance sheet. Balance sheets are ridiculous. They had to do so much borrowing to spend them, to keep themselves from going under, so to speak, not underwater, completely belly up during the pandemic, because nobody took a cruise, obviously. So I'm not chasing these. I don't think they're worth it.
All right, I got to break away from this and go back to Steve Kovac, because I'm learning we have a statement from Microsoft.
Yeah,
now, Steve, don't we?
Yeah, we sure do, Scott. This is from President Brad Smith of Microsoft on that FTC injunction I told you about just a few minutes ago. He says, quote, "We welcome the opportunity to present our case in federal court. We believe accelerating the legal process in the U.S. will ultimately bring more choice and competition to the market." Now, this is just what I told you earlier. They really, Microsoft really wants this to get to federal court, as is Activision, because they believe not only does it accelerate it before that end date next month, but also they think they have such a strong case that a federal judge will approve the deal and put an end to this litigation, Scott.
All right, so we'll continue to follow this. Steve, thank you for the latest there. Steve Kovac. Dom, thank you. We got to bounce. We'll do final trades after this quick break.
by Bose today.
3 o'clock Eastern time today. We're going to see where this market ends up closing the day. We're good for about 18 points right now. We got a great lineup for you too. I'll see you in just a couple hours time. Let's do some final trades. Brandon, what do you have for us?
AbbVie. It has not been a good stock this year. It's down 15%. I think it's bottomed around the high 130s. The Humira biosimilars, I believe, is priced in. So I think this is a good entry point. 4.5% yield, high free cash flow yield.
Okay, Steve Weiss, what do you got?
Deere, continuing momentum trade. I mean, this is momentum. So there will be some volatility if, depending upon what the numbers are and what the Fed says. But I still think it goes back over 400 near term.
Joey?
I'll mention Broadcom again. It's probably my favorite position right now, and the potential is there for the VMware deal to close $61 billion deal. You need the EU to approve that. So trading out to a reasonable valuation chip play that is going to be a winner in AI, Broadcom's the name.
I'm looking at the market, the internals here of what sectors from the S&P are doing the best. We're at the highs of the day on the Dow. So we're 33,978, approaching a 34,000 round number, and the S&P still holding above 4,300 at 4,317. Weiss, the further this market starts to advance, the harder it's going to be for the bears to stand their ground, so to speak.
Hey, that's for sure. I look at a stock like Adobe, which I owned in the past. Actually bought a little bit of it last week, and not enough to matter one way or the other. But I'm looking at it's up another 4% today after that wild move last week. So it gets more difficult if you're on the sidelines and you have to account for performance, relative performance, to say, hey, here's what I'm still doing. But ultimately, I don't think the world's changed all that much. It's only the market momentum.
Big contribution from Intel today, up 5% for the Dow Jones being.
People look for the next Oracle, the next Adobe, the next one, and they think can be Intel.
Okay, so we'll see what happens over the final few hours here, and I'll see you on Closing Bell in a couple of the exchanges now.
Thank you very much, Scott. Hi, and welcome to The Exchange. I'm Kelly Evans, and here's what's ahead today. A cardboard box recession. That's what we're in, according to Charles Schwab's Jeff Kleintop. But what is it? What does it mean for the economy and for the stock market? Jeff is here to tell us, plus his latest take on international stocks. And Bank of America CEO Brian Moynihan joins us live for an exclusive interview. We'll talk loan demand, deposit flight, bank stress and consolidation, and of course the impact of the Fed's decision this Wednesday. And the market rally has been powered by big tech, but our guest says the gains aren't over. The 3 stocks she expects to keep outperforming from here. Before all that, though, let's start with today's markets. Dom Chu, I miss you, Dom. How's it looking down there?
I miss you too, and things are looking green. Everything looks so green down here right now. It's not dramatic, but we are at session highs right now, Kelly, for the overall stock market. If you look at the Dow Industrials, up about 110 points, 1/3 of 1%. A similar-ish percentage move, up about nearly 1/2 of 1% for the S&P 500, but still now solidly above 4,300, 4,317, up about 18 points. And the outperformer has been that technology-oriented trade in the NASDAQ composite, 13,367 or thereabouts, 108 points to the upside, a nearly 1% gain there. Now, Kelly did mention the interest rate decision coming up later on this week. So ahead of that, let's take a look at where yields have been moving. They've been kind of creeping higher along some of the middle parts of the maturity yield curve. The 6-month T-bill has fallen in terms of yield, risen in price. The 2-year note yield currently 4.60%. If you look at the 10-year note yield, near to medium term trending somewhat higher, now at about 3.78%, and the 30-year long bond 3.92. So an indication today also yields slightly creeping higher, values going down. One other place to keep a close eye on in terms of macro is crude oil. I'm going to show you U.S. benchmark West Texas Intermediate. Currently, those prices $67.53, kind of near the lows of the session right now, down 3.75%, due in part to analysts over at Goldman Sachs, led by Jeff Curry, who've now cut their price targets for crude for both Brent and WTI, citing, amongst other things, more supply coming to market from the likes of Russia and Iran. That's helping to push prices lower. You can see they're now below $70 solidly, $67.53 the last trade there. So keep an eye on that. And then the stock of the day, mega cap technology, business, enterprise software, cloud computing, databases, everything rolled together. That's what you have in Oracle. Those shares up 5.5% at a record high right now. And this is ahead of their earnings report after the closing bell today. So you could say, Kelly, that expectations are high for Oracle, up 5.5% right now. But many analysts out there, including those at Wolfe Research, JP Morgan, have noted that OCI, Oracle's cloud infrastructure platform, is the thing to focus on. Those results could help drive a lot of that growth story for Oracle, and whether or not that comes to fruition, Kel, back over to you.
Just an astonishing up 72%, and it looks like an all-time high for the stock, Dom, by a mile. I mean, not a lot of companies can say that after the 2021 rally. Dom Chu, we appreciate it. Tons of major economic data points are due out this week, from CPI tomorrow to jobless claims on Thursday. And of course, the Fed's decision comes right in the middle of all that. Already this morning, a key gauge of inflation expectations that could factor into the Fed's next move. We turn, of course, to senior economics reporter Steve Leisman for more. Hi, Steve.
Hey, Kelly, yeah, by Thursday, investors are going to have a lot of new information on inflation, the consumer, the Fed, and the job market. Tons, as you say. It's going to set expectations for the months ahead. Here's what Wall Street forecasters think will happen. They're not always right, but here's the consensus. Inflation CPI headline falling to 4%. That's a big drop from the 4.9 we had last month. But you see that? That's the core, ex-food and energy. That's the sticky part, just down 2 ticks and still at a high level of 5.3% to maintain the Fed's concern. The Fed expected to skip and maybe hint of a hike, talking about a hawkish pause or a hawkish skip there. And the PPI comes that day as well. Thursday, we're going to watch jobless claims a little more closely than usual because we had that pop last week at 261, expected to come down, be a little bit more tame this week. There was talk about it being a seasonal adjustment issue. And I like retail sales as a big number this week. Seeing down a tick, a tenth of a percentage point from the 0.4% rise in the prior month. But take out autos, and it looks a little bit better if you take out autos. Markets have embraced the skip and hike sequence, if that's what you want to call it, with a 73% probability of a pause this meeting and a 69% probability that they'll hike in July. The good news, at least for now, July is the last rate hike that's priced in. The bad news, no longer any cuts priced in for this year in the futures market. New Fed forecast this week could move the goalpost even further out. The Fed reported mixed news in its efforts to control inflation expectations. The New York Fed says longer-term inflation expectations did rise. Here are the numbers. The 1 year fell by 0.3. That's a good number, especially because it wasn't because people thought gas prices were coming down. It was other things that were responsible for it. The 3 year at 3, up a tick. 5 year at 2.7, up a tick. Those are areas of concern. The Fed hopes to keep high inflation expectations from becoming entrenched in the minds of businesses and consumers. It's slowly achieving that goal short term, but the longer term numbers seem anchored maybe a bit on the high side right now, Kelly.
I can't remember what they used to look like back in the 1.5% inflation days, you know, because I think they were always a little high. But what I was going to say, though, is the 1 year drop seems pretty noteworthy. I mean, the 1 year hike in the past has been where the Fed started to get super concerned. So that coming down the way that it has, again, maybe a lot of that's gas prices. But regardless, that seems like a pretty dovish development.
It is. And one way to think about it is, what number do you use, Kelly, and everybody has their own, to figure out what the real funds rate is? What are you deflating it by? Current inflation? If you use current inflation, let's say use that high 4%, the Fed is a percentage point. But some people like Jeff Lacker, a former Richard Fed president, likes to use the inflation expectations number 1 year ahead because he says, that's the choice you're making.
Right.
Am I going to save now or am I going to spend now? And so when that number comes down, that 1 year ahead inflation expectations comes down, the Fed gets relatively tighter or looks relatively tighter or has policy relatively better in the right place.
Right. No, dovish development of whether they choose to emphasize it, you know, who knows? That's up to them, especially after the CPI tomorrow. Steve, for now, thank you. We appreciate it. Our Steve Leisman.
Pleasure.
My next guest expects the Fed to hold rates steady at Wednesday's meeting, but says an upward surprise on that CPI number tomorrow could prompt a hike. He also says we're currently in a cardboard box recession. Here to explain is Jeff Kleintop, Chief Global Investment Strategist at Charles Schwab. Jeff, it's great to see you. We've often used the cardboard box as an economic indicator, but you seem to be going a step further here.
Well, last week's news makes it official. Europe entered a recession in Q4 and Q1, but it was the mildest ever. And that might not be too surprising, but it's also too much of a generalization because not everything is in a recession right now. It's what I'm calling a cardboard box recession. During the typical global recession, you get all areas of the economy turning down: manufacturing, trade, services, retail, construction. And they do so around the same time. But now, only manufacturing and trade seem to be in a global recession, not just in Europe, but on a global basis. So I'm referring to this as a cardboard box recession because manufactured items and anything that we ship tends to go in a box. And demand for corrugated fiber board, which is what most cardboard boxes are made from, has fallen to a similar extent we've seen in past recessions. But Kelly, that contrasts with services industries, which have continued to grow. Dom talked about it, I think about 10 minutes ago, with regard to the cruise ships. Now we're seeing the Airline Industries International Air Transport Association double its profit estimates for this year on the surge in flying. So all this explains the mild economic and earnings downturn so far. It's just a cardboard box recession.
You know, you're absolutely right in terms of the pandemic kind of reset that we're going through. But I'm just going to go out there and be extra bearish for you. What if that's going to happen and then the broader recession hits? In other words, I look at the news this morning where Grubhub is now laying off 15% of its workforce. And, you know, yes, travel services are the strongest part of the economy right now, but the business cycle hasn't really turned yet. When that happens, we'll have had a previous recession, a cardboard box recession, and then the real thing. It's just going to be this long, drawn out. And then we had the real terms recession last year because of inflation. So people are going to feel like we've been in a recession for 5 years at that point.
Yeah, and I'm afraid you're right. I think the second half of the year is going to keep us on pins and needles over the fact that the manufacturing, the cardboard box recession, could spread into services. One of the things I'm noticing is that last year we had that change from shortages to gluts in the global market for goods, cardboard box stuff. That took place in the middle of last year. Now I'm seeing it in the labor market. You just mentioned some of the layoffs. But generally, if we look across the globe, the MSCI World Index of Companies, I'm counting the number of times I'm hearing job cuts, reduction in force, layoffs, headcount reduction, furloughs, downsizing, compared to mentions of things like labor shortages or inability to hire or difficulty in hiring. And we've gone from a labor shortage environment over much of the last 18 months to now a labor glut environment. And if you combine that with, I'm seeing way more mentions of layoffs than difficulty in hiring. And that might be an indicator that as we look to the second half, could get tough in the service sector.
Absolutely. I don't mean to interrupt, Jeff, but I actually think this is really important. I want to make sure that people hear, and I want to give you headline credit. You know, when you say that we're in a labor glut, most people would say, no, that can't happen until the unemployment rate is much higher than it is now. But you think that shift has happened?
That's what we're hearing from business leaders. Now, it might take a few months for that to show up in the actual data, right? Usually they tell shareholders and make announcements about coming layoffs before they actually implement them, right? Usually it's 3 to 6 months later. So I'm thinking that's the story for the second half. And Kelly, also, lending conditions also contribute to the weaker jobs outlook. There's a clear and intuitive leading relationship between banks' lending standards and job growth that usually leads by a couple of months. And of course, we all know what happened in March.
We have to talk about international stocks before you go, because despite everything we've said about what's happening in Germany and all the rest of it, you've been a big fan of international, and you're sort of doubling down on that for the back half of the year?
Yeah, I am. You know, if you look outside the U.S., the rally is much broader. The bull market is much broader than in the U.S. If we look at an equal weighted index, which represents the performance of the average stock, since the end of October when stocks bottomed, the equal weighted international EFI index is up well over 20% in a bull market, but the equal weighted S&P only up 4% since then, showing how narrow that U.S. advance is. I think the greater number of stocks helping to push the overall market higher internationally is a better base of support as we look to the second half of the year.
Yeah, and the Japan story, I mean, it's just fun to see it go from, you know, all of us writing, oh, Japan, and it's never going to get its act together, and now it's like, Buffett loves it, the stock market's doing great. I know you share that enthusiasm.
Yeah, that's right. So the Tokyo Stock Exchange has changed some of the rules. Companies are really looking to boost their price-to-book ratio. They used to hold a ton of cash. They're starting to employ that into share buybacks, a lot of things to really turn around profitability there. And investors are noticing, yeah, the Nikkei has doubled the return of the S&P 500 this year.
All right, Jeff Kleintop, we appreciate it. Thank you so much.
Thanks for having me.
Joining me from Charles Schwab today. Now to the most bullish calls out there in the market, and we'll just say Barron's is one of them, running a story this weekend saying the fun has just begun. It's kind of the cover indicator. This is after the S&P has officially broken out more than 20% from those October lows, helped in large part to the AI boom.
Alphabet, Amazon, Microsoft, and Apple all up more than 35% this year. Meta up more than 120%. And my next guess is there are 3 names in this group you'll want to keep betting on as AI gets bigger and better. With me now is Needham senior analyst Laura Martin. Laura, it's great to see you. Welcome.
Hi.
You are feeling bullish, or were you bearish and you're reluctantly sort of chasing these higher? Just kind of give me some context here.
Right. So I think generative AI is like a whole new area that's going to drive cloud performance. I think like the old AI, Big Blue, which is the most famous traditional machine learning, was trained on 8,000 parameters. This new generative AI is trained on 175 billion parameters. So they're almost like not the same business. And I think generative AI is really expensive. These foundation models cost $3 billion at OpenAI, and it took 3 years to build. Microsoft funded most of that. And so you need to be a big company and you need to have cloud resources. And the great news is so ChatGPT is an app that was built on the OpenAI large language model. Once you build an app on an AWS foundation model or Google or Microsoft's, OpenAI, you're not moving. Like if you're a business, you would have to start over by creating. So I think it's going to create a lot of stickiness in these third-party cloud providers and also drive revenue upside for a decade. I think this is a structural new form of business competition.
Yeah.
And 95% of businesses will not build their own 175 billion foundation model. They'll build apps on the ones that exist at the big cloud providers.
Yeah, I think you're absolutely right. I mean, this is one of the most breakthrough, transcendent technological innovations we've seen. And we've already seen quite a few pretty good ones. You do think the cloud providers win the most. So when I mentioned the list of kind of the 5 biggest gainers this year, we said you kind of narrowed that down to 3, but maybe we're over narrowing it. You seem pretty enthusiastic about all of them.
Well, I'm really enthusiastic. I mean, we cover Amazon and Google, so that would be our call. We're a little less sanguine about Meta, which, as you say, is up a lot, but they're working on creating their own foundation models at 65 billion parameters. But the reason you want more parameters is that generative AI makes new stuff. It creates new content. It creates new images. Well, if it's trained on 65 billion parameters, it's not going to be as good at generating the next new thing as somebody who trained on AWS or Google Google has actually 1 trillion parameters in its large language models. So you're just going to end up with better new content out of those larger models. So we're a little less positive on Meta in this particular aspect of generative AI.
You know what's unique, and I'm thinking about some of the companies, who are powering this disruption. For instance, I think it's Stability.ai with Stable Diffusion. I mean, there are a lot of these different startups, but there's not a lot of publicly available ones to trade. And the funny thing is, kind of unlike past innovation cycles, the way to trade it fundamentally already exists on our biggest and most successful companies. So it just seems like a rare opportunity, and I don't know how much more they can move to the upside before all of this hype is really priced in.
Well, and the large get larger here because you have to have data flows and round numbers. Like Microsoft has said publicly, it will commit $13 billion to own 49% of OpenAI as its foundation model. So these things take tens of billions of dollars to create and then have losses from. So that just means the big get bigger. These regulators that are trying to stop the massive, it's going to be impossible. Like the regulators, this new generative AI is going to make these big stocks even bigger, and smaller companies will use the foundation models at those big companies to build apps on. Just makes the divide between companies larger.
Yeah. Last thing real quickly, just your price target on all of these implies how much upside?
I think on this, specifically on generative AI, which is a piece of their business, I think it's 15% on this particular aspect.
Yeah, given that they've already had the runs that they've had. Okay, I'm just waiting till I can talk to you about Netflix. And so the password sharing crackdown seems to have been one of the most bullish catalysts we've ever seen for a stock like this, maybe other than AI. Is the hype going to be met with the numbers in their next quarter, do you think?
No, I don't think so, because ultimately all a password sharing thing is a price increase, right? They're saying, okay, I pay $20 today. My kids can no longer use my password. I go down to $8, and then my kids have the right to pick $8 each. Let's say they all do that or they all don't do that. But 2 years from now, that's it. Like now you need another price increase. It's just a form of hidden price increase, which is not a structural growth driver forever. It's just moving decks around on the chairs around on the Titanic, because people that are paying $20 and $23 probably have a lot of password shares out of home. We're all going to go back to $8 or $9.
Here's my non-scientific
person of the world take on all of this, Laura, which is you watch the efforts by so many of the other players now to launch their streaming businesses. Tremendous amount of capital. They're nowhere near the subscribers that Netflix has. It's clearly in the lead. It's still so cheap, and it does seem to have pricing power and the ability to tap that, on demand. I just have to give it to them. I think I underestimated them.
Well, I will tell you, they're all going to overreport earnings because with the writers on strike, nobody can make new content, and that is their biggest expense. So they're all going to overdeliver free cash flow and earnings so long as the writers and now potentially SAG is going to go on strike, which means no new spending on content, which is really great for the P&Ls for all of these streamers in the near term.
That is fascinating. I think you just helped our viewers more with that than anything. Laura, this is why we love you. Thank you so much.
Take care.
Laura Martin joining me from Needham today. Still ahead, Bank of America CEO Brian Moynihan in an exclusive interview live from the World Medical Innovation Forum. We'll talk lending, the consumer, and what does he want the Fed to do Wednesday? Plus how medical costs factor into all of that. You don't want to miss it. And the story behind the construction of Manhattan's mega towers. An incredible new book on the key players, celebrity tenants, shadow lending market, and one obvious victor, according to the author. You're looking at the shares, though, down 24% for the year for another reason. She joins us ahead with all she uncovered. And as we head to break, let's get a quick check on the markets as the Dow's up more than 110 points, almost near 34,000, which will garner lots of headlines. The S&P 16 points over 4,300, which I believe it would close above today for the first time if we hold there. The Nasdaq powering the way once again, up almost 1%, and the 10-year at 377. We're back after this.
This is The Exchange on CNBC.
Knows healthy life.
Welcome back to The Exchange. Here's the markets. A 3% gain for the Dow today, pretty much just below session highs. S&P is up 17 to 43.16. NASDAQ up 0.8%. The EV-themed stocks continue to be ones to watch. Blink charging shares are higher on news that it will be adding those connectors that Tesla uses to its latest group of fast charging stations. This has been a whole issue. The shares are up 8.5%. Blink took a hit last week
after that news that GM and Ford were both teaming up with Tesla to use those charging stations for their EVs. Now, it's also worth pointing out, shares of Tesla continued their run, up for the 12th straight trading day. That's a record. They are now up 35% just since late May. It's up about 1% today, but it's not the only EV maker gaining today either. BYD and NIO are also higher. Buffett and Munger favorite BYD, getting a boost from Evercore, writing in a note, if you're bullish on electrification, you need to be familiar with this Chinese manufacturer. Those shares are up 2%, NIO up 8% today. And it announced it's cutting prices for cars and a delay in some CapEx and R&D projects. Investors, though, rewarding the near-term boost that should deliver. Now to Contessa Brewer for a CNBC News Update. Hi, Contessa.
Hi there, Kelly. Former President Donald Trump is on his way to Florida to face criminal charges over claims he mishandled classified documents. Trump departed from his New Jersey golf club today ahead of tomorrow's initial appearance in Miami. He has proclaimed his innocence and says the 37 counts against him will not affect his 2024 run for the White House. Following the arraignment, Trump is expected to travel back to New Jersey, where he will then deliver remarks. The U.S. has rejoined the UN Cultural and Scientific Agency, UNESCO, after a decade-long dispute. U.S. officials say that decision is motivated by concern that China will fill the gap left by the U.S. when it comes to policymaking, especially when setting standards for artificial intelligence and technology education. The U.S. stopped funding UNESCO in 2011 when the agency voted to include Palestine as a member state. The U.S. owes $600 million in back dues in order to rejoin. And Kia is recalling nearly 100,000 2023 Sportage vehicles because of a problem with the braking system. A part of the brake can become misaligned and leak, and that could result in a loss of power. Just so you know. Kelly.
Wow, Contessa, thank you very much. Sure. Contessa Brewer. Coming up, Bank of America CEO Brian Moynihan in an exclusive interview live from the World Medical Innovation Forum. We'll talk lending, the consumer, and what does he want the Fed to do Wednesday? That and how medical costs factor into inflation. You don't want to miss it. And a portfolio shakeup reportedly underway at America's biggest public pension plan. CalPERS making a multi-billion-dollar push into venture capital to make up for a lost decade. That's according to the Financial Times. We've got the details and a closer look at the money rushing back into tech and startups next.
The Asper Cream.
Welcome back to The Exchange. The World Medical Innovation Forum, hosted by Bank of America and Mass General Hospital, is underway in Boston. Healthcare obviously remains a key industry to disrupt, but they are gathering global leaders to assess both the opportunities and challenges in the space. Joining us now for an exclusive interview from that conference is Bank of America CEO Brian Moynihan, along with our very own Bertha Coombs. Bertha, kick things off for us.
Kelly, thanks very much. And Brian, thanks so much for making the time.
It's great to be here.
I was really interested in something that you talked about just on stage a few minutes ago, saying that when you're talking to companies that are looking to build up and go public eventually, you talk to them about where capital is coming from now. It was a very interesting discussion this morning with a lot of companies in biotech talking about how the IRA, the Investment Act, is going to impact potential investment in biotech. What are you seeing? And are you seeing that looming pressure of potentially having their prices cut by Medicare already impacting investment?
Well, I think this conference is about biotech investment, really early stage. It's so the real research to commercialization path, and so pretty early on. So the more exciting part of the Inflation Reduction Act for this group is the money going to fund fundamental research. And one of the things the United States has that really is second to none is that fundamental research platform, and in the IRA it gives more money. And so there's moves going on to try to land that money by all the states, including Massachusetts community here, and Ann Kablansky and the team at Mass General, which is one of the great research platforms. So it's more about that. There are large companies here, but more it's about these companies. And their problem is are the capital markets going to go open back up and provide equity capital for
And are you seeing that? Because we haven't seen many IPOs, so
I think 3 this year so far, Bertha.
Yeah.
So but that's with anything else, as the economy stabilizes, as a view of rate stabilizes, as people sort of take stock of what happened over the last couple of years, and then it'll get back in track. And there's big pipelines. These are exciting companies. Tom Sheehan and the team and leads investment bank. He grew up in healthcare, and there's just wonderful companies, and that's why we're here, is to help them think through that process of where they are to where they got to get to.
you talked about as the economy opens up. We've got the Fed meeting starting tomorrow. They're expected to announce a decision on Wednesday. Where do you think they should go? Should they pause at this meeting? And does the economy really depend on that, do you think?
Depend on it. I mean, we're the big American economy. It should never depend on the incremental decision by one party in it. But the Fed's decision on rates is a good view of whether they're taming inflation. So they needed to tame inflation, and that was a serious issue. If you look at what's happened, you're seeing the indicia of inflation tip over and start to come down. It's not over. It's still too high relative to the long-term target of 2. But our teammates think that the current rate environment basically holds, and maybe it goes up a little bit more sometime during this year, meaning the Fed funds rate. And then they start cutting rates in March of next year because they've won the battle on inflation. But they say that the inflation target still takes all the way through next year and to get closer where they want it. And that's
so do you see them pausing, skipping, and then raising again?
There's a lot of views, and when you talk to the Fed over the years, I've been CEO now, it's my 14th year, so I've had a lot of conversation with, is everybody thinks that there's some master plan. There are targets, but they do it very much data dependent, and they use that word often, which just mean they're looking at the circumstances. If you look at the circumstances right now, the labor market's gotten a little less tight, the inflation indicia is down. They've got to measure the impact of all the things that have gone on as it goes through. So I've used the example in 1984, Paul Volcker paused after the failure of Continental Illinois to make sure the disruption, because you've seen lending capacity in the bank industry come down. And they pulled deposits out of the industry by design, and that's what's going on. That's why deposits shrunk. So I think they could take a pause on that, and I think most people think they will. That's what the market's saying. But they can't say I'm done because they don't know, because they need the next set of data.
Brian and
Kelly wants
here.
to jump in here. Kelly?
Bertha, thank you so much. And Brian, it's good to see you again. You just actually raised the point I was going to ask about, where we saw Ray Dalio this morning commenting that, of course, at some point we're going to have a financial crisis, or the Wall Street Journal writing that Powell has to decide between fighting inflation and maybe facing, kind of a bank event, if you will. You sound on the one hand concerned that we should be taking it more seriously, but on the other hand saying it's not going to be systemic enough, that we can keep resuming the inflation fight. And I just wonder if you can elaborate a little bit on that, and which one the Fed should give more weight to right now.
Well, I think in the end of the day, we have a recession predicted for starting the third quarter, fourth quarter, and first quarter of next year. It's a mild recession, and that's largely because the amount of stimulus that was put in the economy in connection with the pandemic, and both fiscal and monetarily, rates were held low for a good period of time, and are only adjusting that out of the system. So, but the strength of the American consumer, if you look at our consumers, they are still growing spending, albeit at a 3 to 4% rate versus a 9 to 10% rate, which they would have been last year versus the year before. And so the economy is slowing down. They're guiding it down. Will be a soft landing. Our economists think it'll be a recession, but a mild recession. And unemployment moves up, in the mid fours, but that used to be full employment, honestly. So it's not quite the disruptive thing. Now, will that have an impact on all the economy, and will that ultimately have an impact on financial services? Of course it does. But the reality is that it's really going to come down to if people are employed and people are spending a little bit more, companies will have revenue and they'll be okay. And what you're seeing is that's happening. And you're also seeing the impact on inflation appears to be enough now that they're winning the battle against the American consumer, which is a hard thing because they're very good at spending money and they continue to spend a lot of money. It's just they're slowing that down.
So I want to ask you, as many clients and customers have noticed, in an era where we're talking about banks being anxious about deposit flight, you and many of the other big banks don't seem very anxious about it. I'll quote from a tweet asking if I could ask you how you offer 0.1% interest on checking and savings accounts. The viewer saying, I just take my money as soon as it hits and send it to Marcus, your competitor at Goldman, where they offer 4 or 5%. What's the philosophy here, and what should we read into this about the sort of funding situation at B of A?
Well, every day we help our clients manage their money, and some of that's transactional money and some of that's savings money, and the savings money we put in the market for them. We have $4 trillion in investment assets, as you well know, too. So the idea is it moves around, but it really depends on the customer and the product and the service. But we have a lot of no-interest checking and low-interest checking, which is money that's moving through people's households every day, whether it's in the companies, too. Same thing, small business, large business, medium-sized business, they have transactional money. And so our job is to put the clients into the market. But when you set it all out, we have $1.9 trillion deposits and $1 trillion of loans, and we have other cash on top of that we've got to put to work. So the idea of paying 5% for money we're just going to turn around and hand back to the Fed doesn't make a lot of sense. So we put our clients into the market to achieve those returns. And we raise deposit money for other institutions, frankly, and through our wealth management platform. That's what we've been doing for years.
Brian, I want to bring it back to healthcare. This is the time of year when large employers are negotiating with payers, they're negotiating with drug makers on what kind of prices they're going to play next year. There's a lot of excitement about these diet drugs that started off for diabetes, but really help people lose significant weight loss. A lot of employers have been reticent to really pull the trigger and say, yes, we'll pay for weight loss. We've got a big drug potentially coming from Lilly at the end of the year in this category. What are you doing as you try to balance keeping costs down and yet at the same time trying to give your employees access next year? Will you be doing that for weight loss drugs?
I think prescribed drugs, we handle them and it goes through the process. But I think you have to step back and say, what have we been trying to do for a long time? So about more than a decade ago, we basically made a decision, especially for the broad base of our employees, to keep their healthcare costs flat from that day till now. They have had no increase in premium across all that time. And we dropped it in half on that day. So a family paid $500 a month, we dropped it to $250, and they still pay $250. And on top of that, we've taken maintenance drugs and made them free if you get them delivered to your house. So heart medicines and things like that. And we've done that. So we're always driving down the cost. If you look at the number one healthcare cost we're going to have for our 200,000 plus teammates and 600,000 family members, it's largely going to be around heart-related and obesity-related and health-related issues, hypertension, things like that. So we have a high interest in actually managing that. That takes behavioral management, and we work with companies on that. It takes dietary management. So when somebody biometric screens to get those reduced premiums, so to speak, we then pair them with a counselor to help them maintain their weight management program. And we have a big fitness program in the company and everything. All this is just to let people manage their own health. It's their decision, and we help them make it. So as those drugs come on stream and are understood and for the right applications and prescribable, of course they'll be in the system. But our goal is they have to pair those with all the other things we do to make it make sense.
In one of the other drugs, in fact, in one of the sessions, people were talking about the drugs to combat Alzheimer's. that Medicare is being a little bit cautious about how it's going to pay for them, but they're out there, and it isn't necessarily just an old person's disease. A lot of people might want to start using them earlier in a preventive. Is that something that you and your team have looked at and talked about? And how are you able to maintain prices so low when prices are rising for you as an employer?
Well, the interesting thing is that one hasn't really come up as much as the diet one sort of is front and center in the near term. But again, it goes back to the whole cycle. In other words, you're trying to maintain health. And we spend about $2 billion a year in healthcare expenses. We're self-insured. And so we have a high interest in getting the best outcome from our teammates because it's against $35 billion of compensation for all those wonderful teammates I have. So the idea is it's not the biggest cost. It's not going to change our course of history. So we want better outcomes. So whether it's a knee replacement and how we've worked to get people that, whether it's certain cancer treatments, whether it's the ability to use some of these advanced stage companies to help people maintain their diet, whether it's doing the mailing thing so the drugs are always coming to the house and we see the compliance go up dramatically and we push the compliance. Those are all techniques. And so I'm not sure where the Alzheimer's one come out because that hasn't been quite the diet ones, so to speak, are going to be the more interesting thing because at the end of the day, that trade-off is very big. And I think companies are going to have to look at it cost benefit. But it takes a healthcare team in our company to be thinking 10, 20, 30 years down the road because the instantaneous benefits are there, but the real long-term benefits are to change the course of history for that teammate and their family members. And that's kind of the interesting question.
And Brian, if I could just indulge you with one more macro question while we still have you. Can you kind of talk about current...
All right, guys. I'm going to end this stream probably a little early because it is getting ready to storm, and I don't want anything to necessarily happen. So looks like we have...
noticing some weakness, and how would you say your own standards are in terms of historical degrees of tightness?
Well, so I think if you look at lending standards overall, by the surveys and stuff they do, they have tightened. If you look at the reality, the loan demand is lower. So in the consumer space, mortgage industry.
All right, guys. Yeah, it's getting ready to storm, so I'm gonna cut this stream off. I'll be on live later on tonight. You guys have a great rest of your day. There's just not much, unless something happens. I don't know.
Clearly slowed down.
It's going to be a boring day. Maybe I can stay on. I don't know. I don't know what to do. I just don't know.
15 million in revenue. You're seeing their line usage, I mean the usage of their lines of credit, basically flatten out. It was still about 10% to 15% below where it was pre-pandemic, but it had fallen much more than that. It got into that level, and now it's sort of flattened out, which means they don't have as much to do with the money. And so you're seeing the effects of. Everybody says you're tightening your standards. That goes on in times like this. But the reality is that companies already have a loan in place and could use it because the cost of credit goes up, i.e. their floating rate loans, and because their demand for their activities is not as high, they're slowing down the usage, which means the economy is slowing down, and that's why we see a recession ahead.
Absolutely. And then one more question. It kind of goes back to...
All right, guys. I will see you all live later on tonight. We're going to get some storms, so I'll see you guys a little bit later on.
Should we consider you eager and willing to go above that threshold? Maybe, if federal